I'm only living off a quarter of my financial gain. I split it in half and I took a quarter.
This is the reason why money matters, okay? Without money, you can't buy food to live, to be alive. So money, you have to have money to be alive. But I believe in creating generational wealth, you know? Yes.
When you look at investments today, Floyd, what do you look at? Is it a feeling? Is it have to make sense to you? Is it something you like?
If it's something that I know is paying off, lucrative and heavy, I got to go with it. I have to go with it.
How much do you like real estate? I know you own some real estate. I got $2 billion worth of real estate. I'm going to 10, so they're like, hey, maybe you partner with Floyd, you know? Create a new fund. Mayweather Cardone fund.
Well, you know, well, that's what I invested in from the beginning. The first time I invested, my first investment was real estate.
Wow.
I went from commercial real estate, huge, skyscrapers actually. So I own, actually what I own.
You're bragging now.
No, I'm not
now
bragging.
You're bragging.
No.
You can brag, man. Shit.
No. Actually, what I own right now is 9 skyscrapers, and I'm building my 10th skyscraper right now. So I own 9 skyscrapers, and I'm building my 10th skyscraper.
Remember one thing, and here's the important thing, that I was a millionaire before I ever did that movie, before I did Conan or Terminator, because I became a millionaire because of real estate, the business that you are in, or one of the businesses that you're in.
I didn't want you to bring that up.
No, but it's true. I saved every penny. I saved every penny. Imagine that I did not have a blazer to go out in with the age of 24 or 25. I had nothing. I was just training and working and training and working and training and working and going to school, getting my degree, my business degree. And I was going around and doing seminars and exhibitions, and every time I made some money, I took the money and I stuffed them right here, my cash, into my boots. Because sometimes I was in England, sometimes in South Africa, sometimes in France, Canada, so I always was flying home. So I didn't want to go to sleep and have someone steal my money. So I was smart, so I stuffed my cash into my boots. Then I took them home, and then I put them in the bank. And that's how I saved up until I had $27,500, and then I put down money for a 6-unit apartment building. And then
you didn't buy a house.
No.
You bought.
No, because I tell you, there was a real estate woman by the name of Olga. Olga. She was from Lebanon, and she was Danny DeVito's height. She was like this, and actually pretty old already. I would say she was in her 60s. It's very unusual to work at that age. And she said to me, she says, Arnold, listen to me. You need income property. When you have a house or when you have a condominium, then you have to pay the mortgage and you have to pay for the expenses. But I find you a 6-unit apartment building that has an owner's unit in front. And you're gonna stay there in this owner's unit. And then you're gonna go and pay for your rent, and then they're gonna pay for their rent, and the value of your property will go up. It was a $240,000 apartment building. Now remember, this is the 70s. $240,000 apartment building. 2 years later, I got $400,000 when I sold that building. 2 years later, $400,000. Now imagine, I put only 27.5 down. Now imagine that profit.
10x.
Right? I mean, imagine that profit. Now I didn't take the money because that Olga came back. I mean, she was the original one that said, I'll be back. And that Olga came back and she says, don't you dare take that money. I said, well, what do you want me to do with that money? We trade up. We trade up. He says, you get a 12 unit. I will find you the 12 unit in Brentwood, even in a better area. And you trade up. That's what we did. 2 years later, we sold that again and traded up to a 36 unit apartment building. And then to a 60 unit apartment building, a 100 unit apartment building. This is how it went.
I hear you talk a lot about cash flow, and I know it's really important to me. So why is it important for the audience to measure it?
Let me be clear about cash flow. It's the only thing I care about. There is no business without cash flow. You might be able to last for a couple of years borrowing money, getting more investors, but if you don't have cash flow, you're going to zero. You got to start thinking about things like real estate. There's a reason Miami real estate is up 40% in the last 18 months or something, because it's a hard asset.
Did you mention real estate?
I own plenty, don't worry. But I've trimmed back a bit on office commercial. I'm waiting to see how that works out, getting more into the residential side. You know, that's a good revenue. You know, I don't have to tell you this. Yeah. Like, you're the guy.
Are you talking about apartments?
Yeah. This guy owns every apartment in Miami. Like, he's the landlord, basically. No, listen, you have to have had a fantastic mark-to-market run on your real estate. It's got to be amazing.
It's been just ridiculous.
Yeah.
And then what happens now with everybody coming down here in the residential, the home price is going up 40%. It's just going to push into renters.
I'm one of those guys. I've been living in a condo. My wife is shopping for a home. She comes back with sticker prices that I want to throw up on my shoes.
Yeah.
Like, the stuff is insane.
Yeah.
It's crazy, but that's the market.
Well, I have this saying that, like, liabilities can be your assets, and assets will always become liabilities at some point. Do you know what I mean by that?
100%. You know, one of the things that a lot of athletes and entertainers and people, folks that grew up like my mother, you know, with very little, they did not understand the difference between a liability and an asset. And it's counterintuitive. Whatever you think is an asset is a liability, and whatever you think is a liability is usually an asset. And people say, but Alex, I'm buying real estate. I said, no, but you have 9 homes, and each one of them costs you $1 million a year, so you have $9 million of negative cash flow. Grant and I own a building, 500 units, and it puts $1.5 million in our pocket every year. So when you perform that out and you forecast that over 10 years, the delta is about $25 million, right? And you do that for 25, 30, 40 years. You buy real estate, you hold on to it, you never sell, you refinance it. Sometimes you have to sell for a strategic reason, but then you land, and today, we're about 8,000 to 10,000 apartment units, and I have 2 regrets in real estate. I didn't buy enough.
Yep. And the second one?
And I sold.
Exactly.
And I sold. But it's okay. You have to sell sometimes. You got to get a double. Not everything's going to be a home run. There's no need to be greedy. Take a single. Take it off the table.
But had you had access to capital back then, you would have never sold anything.
Never. And we wanted to prove ourselves, right? We've put hundreds and hundreds of millions of dollars. We've bought well over $1 billion, $1.5 billion of real estate over the last 10 years. And we had LPs, we had limited partners, and we wanted to put money in their pocket, right? We wanted to build that track record. Now they're coming back to us and they're saying, Alex, don't give me this money back. Keep giving me the cash flow.
Magic Johnson told me once he made much more money. He invested in a real estate fund and started one. He told me he made much more money in real estate in 5 years than he made in totality playing in the NBA.
I don't want to be comfortable. I don't want to live with the mindset of nothing's going to change. It's going to be like this forever.
What do you do with your money to prepare for that?
do smart things. I'm heavy investment, real estate. We just started a
Who
VC.
loves real estate?
Real estate.
Why do you like real estate?
I love real estate. And, you know, real estate is just one thing that you know where your money is. That money's in the ground. So regardless of what's going on in the world, people are always going to need places to do business, places to live. They're always going to need places. So the more that you can achieve the buy or the ownership of these places, the more that you're always going to have revenue coming back to you. You're also putting yourself in a position to always go out and borrow or get, because I have these things to leverage. So the more that you, I guess you could say, the more that you get, the more that you can do. And, you know, sometimes I think people think that it's a far-fetched goal to get. And it's not really. It's not that hard when you gain the understanding of it. The game of Monopoly is a real game.
Yeah.
It's a real fucking game. And when you play Monopoly...
Can you repeat that? I don't know that everybody
The game of Monopoly is a real game. When you play Monopoly, the goal is to buy up as much property as you can and get people to pay you for that property when they land on it. Rent. That's the fucking real game. So when I look at now my success, I'll tell you, here's something that I do. And this
tell us something that only the IRS knows.
This is something that you guys don't know. Let's say I do a movie, right? That movie is whatever the fuck it is. I make a nice amount of money to do a movie. Take that number, split that number in half. Half of that number goes to the government. That's the IRS's, no matter what.
So we're talking about 25 million becomes 12.
We can just call it a number. I don't want people to knock me in the head when I leave here. Let's just call it a number, okay? Let's say that number is a number. No matter what, when you make money, split it in half.
Yeah.
Split it in half right away. Don't put the money in your bank account and look at it as you got all that money, because you don't. Half of that money is not yours. So right away, put it over here. Create a fucking account, call it the tax account. Put half of that there, so as you make money, you always put this money in the tax account. I never got to worry of giving the government their money, because that money's over there, and I don't look at that like it's my fucking money. I'm never gonna touch that money, because it's not mine, it's the government. So now off of my half, what do I wanna do? I'm gonna take another half. This half is going over here. This half is for my next real estate investment. I don't know what it is. I haven't figured it out yet, but I'm putting it over here, so when I do figure it out, I got it there to buy. So now I'm only living.
This is so ridiculous.
I'm only living off a quarter of my financial gain. I split it in half, and I took a quarter.
This is the reason why money matters, okay? Without money, you can't buy food to live, to be alive. So money, you have to have money to be alive. But I believe in creating generational wealth, you know? Yes.
When you look at investments today, Floyd, what do you look at for is it a feeling? Is it have to make sense to you? Is it something you like?
If it's something that I know is paying off, lucrative and heavy, I got to go with it. I have to go with it.
How much do you like real estate? I know you own some real estate. I got $2 billion worth of real estate. I'm going to 10, so they're like, hey, maybe you partner with Floyd, you know? Create a new fund. Mayweather Cardone fund.
Well, you know, well, that's what I invested in from the beginning. The first time I invested, my first investment was real estate.
Wow.
I went from commercial real estate, huge, skyscrapers actually. So I own, actually what I own.
You're bragging now.
No, I'm not
now
bragging.
You're bragging.
No.
You can brag, man.
No. Actually, what I own right now is 9 skyscrapers. And I'm building my 10th skyscraper right now. So I own 9 skyscrapers, and I'm building my 10th skyscraper.
Remember one thing, And here's the important thing, that I was a millionaire before I ever did that movie, before I did Conan or Terminator, because I became a millionaire because of real estate, the business that you are in, or one of the businesses that you're in.
I didn't want you to bring that up.
No, but it's true. I saved every penny. I saved every penny. Imagine that I did not have a blazer to go out in with the age of 24 or 25. I had nothing. I was just training and working and training and working and training and working and going to school, getting my degree, my business degree. And I was going around and doing seminars and exhibitions, and every time I made some money, I took the money and I stuffed them right here, my cash, into my boots. Because sometimes I was in England, sometimes in South Africa, sometimes in France, Canada, so I always was flying home. So I didn't want to go to sleep and have someone steal my money. So I was smart, so I stuffed my cash into my boots. Then I took them home, and then I put them in the bank. And that's how I saved up until I had $27,500, and then I put down money for a 6-unit apartment building. And then
You didn't buy a house.
No.
You bought.
No, because I tell you, there was a real estate woman by the name of Olga. Olga. She was from Lebanon, and she was Danny DeVito's height. She was like this, and actually pretty old already. I would say she was in her 60s. It's very unusual to work at that age. And she said to me, she says, Arnold, listen to me. You need income property. When you have a house or when you have a condominium, then you have to pay the mortgage and you have to pay for the expenses. But I find you a 6-unit apartment building that has an owner's unit in front. And you're gonna stay there in this owner's unit. And then you're gonna go and pay for your rent, and then they're gonna pay for their rent, and the value of your property will go up. It was a $240,000 apartment building. Now remember, this is the 70s. $240,000 apartment building. 2 years later, I got $400,000 when I sold that building. 2 years later, $400,000. Now imagine, I put only 27.5 down. Now imagine that profit.
10x.
Right? I mean, imagine that profit. Now I didn't take the money because that Olga came back. I mean, she was the original one that said, I'll be back. And
Hey, welcome everybody. Great to have you guys here. We got X rocking live. We got Instagram. We got TikTok. We got it all.
Rumble.
And we got Rumble?
Yeah, we're on Rumble.
And we got Grant Cardone in the house talking to you about how to take advantage of a massive real estate market correction that is now clearly underway. This is happening, and we're going to show you how to take advantage of it in your market, whether you live in Cincinnati, Columbus, Dayton, Ohio, Sacramento, Los Angeles, San Diego. I need to see a map, dude. Vegas, Tahoe, anywhere in Colorado is going to be a freaking on sale. You get free weed and you get free housing, okay? You guys, we're about to enter every major dynamic if you want to take advantage of real estate. I'm so sick of hearing people say, oh my God, the poor middle class cannot buy a house. I'm going to show you how to make $1 million on any piece of real estate that you want to. I don't need to see the states, bro. It's the cities I need to see, man. Come on, okay? So you're in Miami, you're in Minneapolis, you're in Sacramento, you're in San Diego, you're in New York, New Jersey, you name it. Toronto, Vancouver, Calgary, okay, wherever you guys are, Hartford, North Carolina, Tallahassee, Houston, Texas, Monroe, Louisiana, Detroit, Okay, like this is the biggest real estate market correction, and it's underway. So all of you that are out there like, man, housing's so expensive. Wrong. That you're looking in the wrong place, folks. Okay? You're like, oh my God, I can't buy any real estate. You can buy your whole neighborhood right now, and every time you buy a piece of real estate today, I'm going to show you every deal could be $1 million. And by the way, should be $1 million. I'm going to show you how to do it with no money. I'm going to show you how to do it with no credit. I'm going to show you how to do it in any market. I'm going to show you how to do it with passive income. I'll show you how to do it with other people's money. This is going to be great. I'm going to spend about 90 minutes with you today. I just wanted to warm up the room. Appreciate so many people joining us. How many people registered, Jared?
53,000.
53,000. These are new names, not my database. 53,000 new people registered for this event. You guys that are in Shreveport, Louisiana, man, you should be stealing real estate. Don't go down to New Orleans. Just grab it all up in Shreveport, because you're gonna have the benefits of Dallas. Okay, you guys in Washington, the state of Washington, on sale. DC, District of Columbia. Okay, you can rob stuff, steal stuff there. Anywhere in Virginia, Richmond, Utah, you got St. George, you got Provo, you got Orem, you got Salt Lake City. I know all these markets. The reason I know them is I own $5 billion worth of real estate. I've been in real estate since I was 28 years old. So almost 40 years I've been buying real estate around the United States. I've shopped real estate across the planet. And I've shopped it in Australia, Singapore, Malaysia. I was in South America just last week. I'm telling you, folks, if you live in America, okay, and you want to buy real estate in America, and you've been looking for your way to enter into this marketplace, you're in Eugene, Oregon, okay, you're in Salem, Oregon. I know these spots: San Antonio, Austin. What's between San Antonio and Austin? What's that little town? That little gap right there. It's called, what's called, what?
Something River? No.
No. San Marcos, New Braunfels. Yeah, there you go. Thank you for helping me out. Our VIPs are helping us out. How much is it to be VIP here and ask questions?
$17.
$17 VIP package. That's what we do here. So what I'm going to do today is I'm going to spend the next 90 minutes talking to you about Tulsa, Greenville, Lake Mary, Florida, Richmond, Virginia, how to find a deal. How do you go to McAllen, Texas, or Kansas City, Missouri? How do you go to those markets in Buffalo, Niagara Falls? Okay, how do you go to San Diego, Chula Vista, Rancho Santa Fe? All those are different markets, okay? How do you go into Tampa Bay? North Tampa Bay is different than St. Pete. How do you go into Pittsburgh? Buy real estate in Pittsburgh right now, or move to Philadelphia, move over to Philadelphia just a little bit, buy there. Maybe you're in New Jersey and you want to buy real estate in New York, or maybe you're in New York and you're scared of Madami. By the way, Trump said yesterday he'd be willing to live in a Madami state. I think he's a tricky dude.
He is.
Fort Lauderdale, Miami, you got Naples on the other side. We got Tampa, Orlando, Kissimmee,
north of Kissimmee, yeah.
You know, all these are little different pockets and have different opportunities. Indianapolis is different than Columbus, even though they're only a couple hours apart. You go to Chicago, then you go to Peoria. All these pockets are opportunities for you guys that are living in those markets. If you know the market, you should be looking for specific types of real estate. So if you're on X, make sure you're going to repost on X. Grant Cardone's live. This is completely free, by the way. There's only one thing you can buy today. I think it's how much?
A couple $100, yeah.
A couple $100. It's a free call with our office. Comes with a 10-hour training program.
Two-day live
and
event,
a 2-day live event for those of you who don't want to try to consume this in 90 minutes and you want to spend more time with me. I think it's grantcardone.com/now. That's the only thing you can buy today, grantcardone.com/now. It's a package worth about $3,000 and you can grab it for $200. Go there if it makes sense, do it. If it doesn't make sense, don't do it. I'm going to spend 90 minutes. You're going to feel like you're drinking out of a fire hose. I'm going to hit you with I'm going to give you $1 billion worth of data in 90 minutes, okay? If you pick up, what's 1 million? If you only pick up, I love doing math, divided by 1 billion. If you only pick up 0.001%, which means you lost the deal. And most of you that are looking around at real estate right now, you're like, I can't afford it. The truth is, if you had unlimited money, would you know what to buy? Okay, let's just ask the VIPs, okay? If you had unlimited money, but you had to spend the money before next Friday, okay? And here's the deal, you can't lose the money. It's got to be positive cash flow, okay? You're going to have an investor give you the money. Would you know what to look for? Nope, 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 yes, 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 nope, nope, nope. There's more no's than yeses. See, so guys, don't blame it on the money, because money's not your problem. I just proved to you money's not the issue. First of all, there's more money on this planet than there are people times infinite.
Yeah.
Because they'll just keep printing money. Your problem is not money. Your problem is I don't know what to look for. I don't know what to pay for it. I don't know how to manage it. I don't know how to see whether this is the one or that's the one. I'm going to show you today in the next 90 minutes how to find one piece of real estate.
Other side.
And the target is to make $1 million for you and your investors. Okay, I can show you the math, the exact math, exactly what to look for, precisely and exactly. While everybody else is trying to buy a single family house, oh my God, I need a deal on a single family house to live in. I'm gonna show you how to make $1 million. Now let me ask you guys this. Would you rather make $1 million buying real estate, or would you rather own one home? Okay, can we do polls in our Zoom? Is this a Zoom?
Yeah.
Yeah.
VIPs in Zoom.
Yeah. What would you rather? Would you rather, I say, look, man, you can win a house, or you can make $1 million buying real estate. Okay, good. When you go to your spouse, your husband, your wife, you say, look, baby, rather than us buying a house right now, why don't we go find a real estate deal where we can make $1 million? Okay? Would you rather, I'm going to ask you this question. Would you rather buy a house with no money down that you live in, or would you rather buy real estate with no money down and make $1 million for you and $1 million for your investors? And you're like, well, yeah, that's cool, Grant, that you say that, but like that's impossible, okay? If you found 32 units and the rents were I'll just show you the math on this. If you found 32 units in your market, let's say you're in Cincinnati and you found 32 units and the rent was $1,000 and you know for sure they should be $1,200. 200 times 32 times 12 divided by 0.06 is $1,280,000. Profit on that one deal. All you had to do, by the way, I didn't know this until I was 45 years old. You had to find 32 units, the number of units where the rent was 200 too low, and you walked into the property without spending any money. What the hell's happening? Oh, there's the poll. Oh, you show me the poll. Okay, would you rather
98% want the $1 million real estate deal.
Yeah, there's 2%. They're like, no, I want to buy a house to live in. Okay, whatever. Your house isn't going to go up $1.2 million. You're not going to buy a house. Just understand this. You're not going to buy a house for $440,000. That's the average price of a home in America. The average mortgage is $416,000. What's the note on 6 5/8 on 416? Okay, you're not going to buy a house and make $1,280,000.
440,000.
416,000. 416 times 0.0658. So I'm going to give you the data, guys. What you need is the confidence, okay? And you need focus. You need to be laser focused.
$2,750.
Okay, the payment on this house is $2,750 before property taxes, before insurance, before maintenance, before PMI. PMI, principal mortgage insurance, okay? Before any of those things, this is the base. That's if you had good credit. $2,750. You could rent this same place for about $1,500. Okay, but that's not the question. Would you rather pay $2,750 a month, or would you rather make $2,000 a month with the potential to make $1 million? Okay, because this house is not going to make $1 million, not in 30 years. 30 years from now, if that house is $1.4 million, you did not make $1.2 million. Because you paid, what'd you pay in interest? $27.50 times 360 months.
990,000.
Flow. They come with great tax write-offs. They come with tremendous amounts of beneficial leverage. Investors will invest in it. No investor is going to give you money to buy a house. Okay? But an investor would give you money to do this. So when you leave here today, my goal is to put you in a position where you're saying, hey, I'm making $1.2 million every time I do a deal, and I'll show you how to do it today with no money. Okay. Now, for those of you that want to go deep with this, grantcardone.com/now. We got the super offer for you. You can just go there. How much is it exactly?
It's $297. You get to spend 2 days with Grant. We're going to do live. It's going to happen in 2 weeks, 2 full days going deep on this. Covering everything all through the process. We're going to set the stage for you on what you need to get started with. If you don't ever do anything with us again, this is what you need to do in order to get started. For $297, you can spend 2 days with him. He'll walk you through the entire process in way more detail than we have the ability to go into today.
In 90 minutes.
And we're going to give you a free strategy call with one of our coaches, so you can get on. They're going to tell you exactly what you need to do in order to get started. And based on your goals, what you need to do.
Yeah, because there's different paths, okay? Like your goals are like, hey, I want to make $1 million on one deal. But then there's the path that you have today. Maybe you have some money to put down. Maybe you don't. Maybe you have credit. Maybe you don't have credit. Maybe you don't have any experience. Maybe you do have some experience. Maybe you've been flipping homes or wholesaling. Well, each of you have a different path. Also, the city you're in or the state or the country can also change the path. So you're going to get on a call with one of our coaches and lay out exactly. That's free for the first 100. I can't do this for everybody. There's 53,000 people registered for this event. Okay, we won't even know how many people are actually online today. I got people on X, Instagram. I got 20 million followers online. Facebook's on here today. Rumble, X, TikTok. Who knows what the hell is going on TikTok? I got a bunch of OnlyFans fans over there. Okay, so look, you got a house you can buy for $440. Okay, or you have an apartment deal, 32 units that you could have bought, by the way, with none of your own money. You could have gone to your uncle, your brother, your sister, your mom. You could have talked maybe your uncle or your dad who's now retired, but he's got a retirement account with $2 or $3 or $4 million at Vanguard. And you're like, dude, Dad, you know we can self-direct that money. I can show you how to do that. Self-direct your IRA 401k for your mom or dad, and they could do this deal, and you could make them $1.2 million. Why would you want to make your dad $1.2 million? You're the only person in the family. Your dad's going to die in the next 10 or 15 years. You could turn that money 4 or 5 times in the next, let's say 15 years. In the next 15 years, you could turn the $1 million into 6 or 7 or 8 million, plus the money he had in his retirement account. And by the way, you could have done all that for your dad for $250. You could have transferred his IRA. I could show you how to do this. We've done this for thousands of our customers, okay? You move the retirement money over without a penalty, no tax event. Move it out of the stock market, invest in this one real estate deal. You and your dad would be partners and say, Dad, you keep all the money. Okay? And when you die, Dad, give me all the upside. Okay? Split the rest of it however you want. The first $4 million you got in your retirement account, Dad, split it the way you want. But whatever I can grow it, Dad, just promise me you give me whatever I grow it. Okay? See, this would be a brilliant way for you guys to get rich. So when you leave today, I want you focused on one kind of real estate. That's what I said to you. I'm going to give you $1 billion worth of advice. If you pick up 0.001% of it, that's $1 million. What do you want to be looking for? Well, don't look for this, because these aren't going to go down. Okay, the reason they're not going to go down is you don't have enough supply. You got too many people trying to buy that asset, and there's no urgency from the seller. This is one house, single family home. You know, you get to put your name on it. You got to pay the insurance. You got to pay the taxes. You got to pay the furniture. You don't get big tax write-offs. What I want to do is I want to go buy this. I want to go buy these, okay, where they're right next to each other. This is what Warren Buffett said, if he could buy 10,000 houses, and I really want this to be 32 units. 64 would be even better. And you're like, I don't have that much money. Okay, remember this. Money's not your problem. Money is not your problem. In fact, Warren Buffett said, if I could buy a couple 100,000 single-family homes, he would buy them. And guess what? Blackstone went and bought 10,000 homes. They're like, yeah, that's good advice, okay? So what I want is I want tenants. I want rent coming in. Why? Because I get cash flow. Okay? And I love cash flow. A lot of cash flow. So I'm going to show you my history, how I got started in real estate. I got started with you guys, just like you, okay? Let's say your understanding of real estate could be on a scale from 0 to 10. Okay, let's say 0 to 10. 10, you know as much about real estate as I do. You know debt, where to find the deal, where to buy the deal, how to raise money. You know how to get cash flow. You know how to increase or force appreciation. You know when to exit, how to exit, who to exit to. You have 10, on a scale to 10, you have a 10 in confidence. Also, you can raise money. Also, you can get access to deals. You know exactly who to call. Where would you rate yourself? So I understand what the room's doing, what the room's thinking. 0, 0, 2, 5. Okay, good. So look, as I started where you are, I started with a 0. So if you know nothing about real estate, guess what? I was 28 years old and I knew nothing. I only knew one thing. I had total absolute confidence in one thing. I didn't know how to do it. I didn't have any confidence in how to do it or what to do or how to get a loan, or I didn't know anything about that. I just knew I loved real estate. I've always loved real estate. Every time I've ever driven by something, I'm like, if you've ever done this, who lives there? Oh my God, the big hedge. Who lives on the other side? Or you look over you snuck into their yard, which I've done many times, and you're like, oh my God, what a beautiful house. Like if you have that love or attachment to like that, I want that, okay? That's all you really need. You need confidence to know, hey man, I want to own that neighborhood. Now here's the deal. If you're looking over Jeff Bezos's hedge, which by the way, he pays $1,000 a week to keep it higher than it should be. He just pays the fine. You can't buy his house. His house is not for sale, okay? If you come to Miami and you go to Indian Creek and you see Ivanka Trump's house, it's not for sale. Tom Brady's got a house there. He's not selling it. You can't get a deal there. Jeff Bezos owns 3 homes there, $200 or $300 million worth of real estate. You go to see Ken Griffin, what he's building down in Palm Beach. Like, oh my God, man, these rich guys are driving prices up. That is not the real estate you should be looking at. You can look at it to become, oh, I want to be rich one day, but the real estate that you should be looking at are all the people that work for Jeff and Ken and Ivanka and Tom Brady are renting. They're paying rent because they can't afford to live there, and they're paying rent because they have job opportunities with these people. What you want to look for is down the block, 2 or 3 or 4 or 5 or 6 blocks, a mile from where these people live, and you're like, that is where the money is. Why? Because let's say this is 28 units. I was 28 years old. If it was 28 units and the rents could go up $300, which they're going to go up $300, it's just about when. Okay, watch what happens. Watch how much money I make. 28 times 300 times 12. I'm going to give you all this math later. That's $1.6 million. I could give $1 million back to my investor. He put the money down, and I keep $680,000 for myself. Your no money turned into $680,000. Do that 10 times, you made $7 million. Okay? You just have to know what to look for. So now, you guys, maybe your understanding of real estate is a 0 or a 1 or a 2. Understand, I started exactly where you are. Today we own $5.2 billion worth of real estate. I'm gonna show you how I got started. But before I do, I'm gonna show you what I looked at. I'm gonna show you the mistakes I made. I'm gonna show you that I should be 50 billion now, not 5 billion. I'm gonna show you that anyone can do this, by the way. White, black, male, female, brown, whatever your deal is, bro. You like, if you have a green card to live in the United States of America, maybe not even that. Okay, I'm telling you, anyone can do what I'm sharing with you today. Now, I do a lot of stuff in my career, folks. I'm a professional speaker. I've spoke to audiences all over the world, 34,000 people at a time. I've spoke to tens of millions of people online. I've been paid to speak since I was 29 years old. Okay, real estate is easier for me to teach you than it is to become a professional speaker. I've written books. I've tens of millions of books have been sold around the world. 10X Rule, if you're not first, you're last. Sell or Be Sold, The Closed Survival Guide, this book, a bestseller, How to Create Wealth Investing in Real Estate, the Wealth Creation book, the Millionaire booklet, this booklet right here, like it's all over the place. It's in Taiwan. It's in 37 languages, okay? I can teach you how to buy real estate. I cannot teach you how to write a book, much less how to sell one.
Yeah.
Or how to get people to even know what the book is, okay? We have a consulting company. We consult companies and have been doing this since I was 29 years old, consulting companies how to drive revenue. I have a better chance of showing you how to buy one piece of real estate to make $1 million than I do showing you how to grow your business by $1 million.
And can I say one thing?
Yeah.
There's a lot of people that are asking questions. I just want to say two things. Number one, a lot of people are saying, how do I get started? I don't have money. I don't know people with money. I will just tell you, the majority of the deals that get done in all of real estate happen with not my own money, with other people's money that comes together. They bring money together. The biggest institutions in the world that buy real estate do not use their own money to buy it. They raise money from people. And so one of the things we'll talk a little bit about today is like, where do you go to raise money? How do you actually raise money? Well, the truth is, if you don't know, if you don't understand real estate, if you can't go into a market, you can't find a deal, you don't know where the $1 million profit is, if you don't know the elements to pitch the deal to a potential investor, you're never going to raise any money.
This is my offer to everybody right now. I have $10 million sitting in an account right now. Okay, 10 million in cash. I know because somebody sent me the note today. You got your 10 million. 10 million, I give you $10 million right now, today, right now. Okay, but you have to buy the real estate in the next, before the end of the year. That gives you 45 days. On a scale from 1 to 0, I'm sorry.
1 to 10.
0 to 10, on a scale from 0 to 10, how many of you, because you cannot mess up this deal, okay? You're going to bring me the deal. You're going to bring me the deal, and I'll be like, I'll pay for the deal, but you only get one shot to show me the perfect deal. How many of you have complete confidence, or where would your confidence be that you could find a deal in the next 40 days? 0 to 10. I have the money. Okay, there's a lot of you are blown up on yourselves. I got to tell you, there's a whole bunch of people in here. Okay, good. So you guys that believe you could do this, you already went to grantcardone.com/now, right? Because you're going to send me the deal. I have the 10 million. I already have that deal. So I just solved your problem. I have all the money. I have the money. You're going to bring me a deal, okay? Where are you going to get the deal from? Where are you going to find the deal? What's the returns going to be like? What's the exit? Who's going to put debt on it, okay? How are we going to make money on it? How are you going to make any money on it? Who's going to manage the deal? How are we going to raise the rents? Why didn't we buy the one across the street or 2 miles away? Why didn't we go on the south side of town, the north side of town, or the east side of town? Because I'm going to know all that shit. And I'm going to be like, this ain't a deal, dude. Okay? And then you're going to blow the chance. Okay? You understand? So for those of you that want to know what market, what asset, what side of town, where to get started, is it going to be a Fannie Mae loan? Is it going to be a Freddie Mac loan? Is it going to be a CMBS loan? All this stuff can be answered. It's not actually that complicated unless you're hearing it for the first time like I did when I was just 28 years old. So guess what I did when I was 28? I bought the wrong assets twice in a row and thought I was doing the right thing. Okay, that's what I want to show you today. But let me tell you why you want to pay attention to this today. And this is why we called this grantcardone.com/now. This opportunity is now. This is not going to be forever. We are in a major, major correction, an opportunity of a lifetime. If you've heard me talk about real estate recently.
I just want to ask a question right now. How many of you, just post in the chat, how many of you have ever heard that real estate operates in cycles? Just put yes or no in the chat if you've ever heard that real estate operates in cycles. Let's just see all the people here saying yes, okay? So real estate is a cyclical business. It moves over a relatively predictable period of time, and there's like massive flashing indicators that the opportunity is coming. And that is the moment that we're in right now. And Grant's going to tell you right now why the opportunity is so big right now.
Thank you, Jared. Mm-hmm. Thank you. Okay, this is 1995. This is when I started buying real estate. This is 2008. This is 2025. Okay, Okay, and this is what's happening. Okay, real estate's going down right here. Then it goes back up again, then it goes down, then it went back up, and this is what's happening right now. Different kinds of real estate. Back here, it was single-family homes and apartments. Right here, it was single-family homes only, and right here, it's not homes, it's apartments. Okay, these are the drops. This is where we're at right here. We have a major correction here. If you'd have bought 9 and 10 and 11 and 12 when I bought 1,100 units. Can you pull up that article? 1,100 units in, or should I do it on mine? Can he see mine or his?
You can pull up the article.
You can?
I'm going to pull it up right
now. I bought 1,100 units in 2012.
Can you guys see mine?
Right here, 2012. Okay, Grant Cardone acquires South Florida apartment portfolio for $58 million.
The largest private acquisition in 2012.
Okay, guess what was happening in 2012? All the buyers were gone. Okay, I went in, grabbed this one asset. I heard about it on a Thursday. Hey, Grant, we got this deal, 1,100 units, a big portfolio. They have to sell, if you're taking notes. It wasn't, they want to sell. I have to sell. The guy died. He owned the estate. In the will, when I die, sell the asset. Okay? No one had ever owned this asset before. There was 58 different buyers for this $58 million purchase. Now, that gave me confidence. That didn't bother me. I knew the more buyers that were on the deal. Many of you are like, I can't bid on a deal with 58. I didn't have the money either, folks. I didn't have the money to do the deal. I had so much confidence in this deal. This was 13 years ago. Mm-hmm. I had been buying real estate for 25 years, learning.
Now, guys. Go back to Grant now.
I've been learning about real estate for 25 years, and then this deal popped. Guess what? I didn't have the money. All my equity was in my home, okay? Now watch. Let me just give you another example right here. Imagine the same thing happens to you. A deal comes along, let's pretend it's $60 million, and you know for sure you're going to make $20 million. Just pretend with me for a second. We're just having a fun time here talking, okay? How many of you can think big? Put big thinker, or just put big, B-I-G, if you're a big thinker. We're just playing a game right now, okay? This is very important, by the way. Every single thing I say to you in this real estate training today, everything I say to you has something to do with what you're going to be doing in real estate going forward, okay? We got a lot of big thinkers. Imagine this $60 million piece of real estate comes along. You guys are like, yeah, if I had $10 million, Grant's money, I could go buy something. Truth is, you couldn't because you don't have the confidence. You don't even have the inventory or access to the activity, the deals. Okay, check it out. Let's say you knew for sure I'm going to make $20 million when I buy this deal, at least $20 million. I knew that for sure because this asset was going to be sold. Why? Because in his will, in the trust, it said he must trade the asset for the family. I knew, I went to my wife. I said, baby, we're going to make $20 million on this deal. She's like, well, go buy it. I said, we don't have any money. I said, I don't have any money. I said, but we have a house, and the house had equity in it. I said, I want to sell the house. I want to use the equity. Plus, I have 2 credit cards, and I had a line of credit at the bank. I want to use the equity, the credit cards, some money from our business account, and I want to get a line of credit with the bank to buy this deal, okay? Basically, I knew how to do the deal. I knew the deal was $58 million. I got it for $58 million. I financed $43 million through Fannie and Freddie. I had to come up with $15 million, okay? Now, I knew for sure I was going to make $20 million. So I went to my wife and said, I want to sell the house. She's like, whatever you think. That's how much confidence we had, okay? We sold the house, got the equity, banged the credit cards. This is expensive money, 15% money, okay? But would you borrow money at 15% to make $20 million? You probably would, okay? And then we got a line of credit from the lender for my bank. And then I went to Jared, I went to my sister, I went to my brother to piece the rest of the money together, okay? Now, long story short, I didn't make $20 million on the deal. We bought the deal for $58 million. Today, it's on my books at, let me see here. Let's see what it's, we still own the asset. The deal's paid me me see. The deal's paid me like $5 million a year for 13 years, whatever that is. 5 million cash flow.
70
times
70,
13.
65 million.
Yeah, it's paid me $65 million. Me and the investor, $65 million in cash flow. What am I looking for right here? I'm looking
Your deal
for
tracker.
My deal tracker. Where's my deals at? Are they in here?
Active deals right here.
Okay, now I'm just going to show you this because I think it's very important that everybody sees. You shouldn't trust anybody. You should say, show me. Okay, show me what you're saying. Validate it. And I will always do that with you guys. Okay, you can ask me anything. I'm the most transparent person you're ever going to meet. You don't need to trust me. Okay, you need to say, show me, and then you can trust what you saw. Okay, this deal right here, you see these deals called Harbor Bay, K-South, Harbor City, Harbor Palms, Harbor Pines, Harbor Breeze. The value of this real estate today, can y'all see that down there? This number right here. I'm going to make it a little bigger and put it in the center right there. Can y'all see that? What number do y'all see down there? Throw it in the chat. Throw it in the chat if you guys can see that. Yeah. It says $267 million. Now I put $15 million down. The assets worth $267 million today. Would you sell your house? Could you talk your wife or your husband and your kids to sell the house and get the cash, bang Visa, bang MasterCard, borrow money from the bank and borrow money from your sister, your brother, and your best friend? Yeah, well, let me just say this. If you say, oh yeah, I would do that, then why haven't you? Okay, let's just keep this real. If you say, yeah, I would do that, then why haven't you? Okay, probably because you don't know what to look for. You don't know how to get the loan. You don't know how to pitch the investors. You don't know how to tell the story, and you haven't sold your house, okay? Okay, so let me just show you why right now, okay? Why grantcardone.com/now. Why is this now, okay? First of all, we got a president right now talking about a 50-year mortgage. Trump, this Trump effect. This is why you guys want to do it now. For those of you that are taking notes, okay, just put number one note, the Trump effect. This cat is going to do anything and everything starting April, May of 2026 to unleash money into the American economy, okay? The Trump effect, 50-year mortgage, $2,000 checks. Those are bigger checks than during COVID, okay? Guess what's going to happen? All this will inflate our economy. Number two, massive tax benefits. When I buy a house, okay, when you buy a $400,000 house, if you guys want to understand how to really make money, the wealthy know this. The middle class seem to, for whatever reason, like not listen. When you buy a single family home in America for $440,000, Jared, let's take 50,000 off of the land, 390. 390 divided by 27. This is how much you can write off a year, $14,444. That's what you can write off a year, okay? If I bought a $440,000 fourplex, I would write off $160,000 the day I bought it, okay? This is what would happen. I would put $20,000 down to buy this, and I can. That's a 5% down payment program that exists today with Fannie and Freddie, if you know how to talk right, okay? I would write a check for 20 grand, buy that asset, finance 420,000, okay? By the way, it'd be easier to get this loan than this loan. Much easier, because this has cash flow, this doesn't, okay? And I would get to write off $160,000 for my investors. Let's say I don't have the money. I go to my uncle, he's got 20 grand. I say, Unc, okay, can you write me a check for 20 grand? I'm gonna buy this fourplex. I'm gonna give you 8 times the tax write-off. If he's a professional real estate investor, qualified by the IRS, what's the section number?
Section 469.
Section 469. He's a dentist. He's a brain surgeon. He's a he's a car dealer, but his wife has a professional 469 professional real estate. What's the term, Jared?
It's qualified real estate professional status.
Qualified real estate status. Bruh, he gave me 20. He wrote off 8x on his income, which means for the next 8 years, okay, he will write off that $20,000 8 times till he catches up with it. That means all the income that comes from this building and all the earnings from his other business, by the way, are now depleted by $160,000. He could wipe out, let's say he makes $160,000 a year. This is what he would do. See, you don't need the tax write-off. He needs it. You're not making any money, okay? When I was 28 years old, I wasn't making any money. I didn't need tax write-offs. My investors did, though. So I go to a guy, I'm like, you give me a check for 20 grand, you make $160,000 of AGI. AGI is adjusted gross income. He's a dentist. He's doing great. He's making money. He hates paying taxes. That's going to cost him $40,000 or $50,000. And I'm like, this $20,000 comes with a $160,000 tax write-off. That means his tax bill that year will be zero. Dude, he could do this every year. He could do it 8 times in a row. I mean, he might be like, bro, I'll give you the 20 grand to get the 160 and you keep the real estate. There's an argument to be had that you could be like, what are you going to give me for my investment? Nothing. I gave you the depreciation. I'm not giving you anything else. You keep all the cash flow. You keep the upside. Like, Jared, how many different tax schemes have you been pitched where you're like, I'll give you this to get a deduction?
At least 15 that probably a lot of people are pitched.
Yeah.
R&D credits, conservation conservation easements, oil and gas deals, charitable foundations, like, I mean, the whole deal.
So why right now? Why this? Why do you want to get your head wrapped around this? I know there's a lot to learn. I'm going to give you a lot of data in a very short period of time. 50-year mortgage, okay? We got the 50-year mortgage coming. We got lower interest rates coming. We got tax benefits. We have a major market correction. Major, phenomenal amount of market correction. I bought $600 million worth of real estate last year, just so you guys know, I'm not here teaching you stuff. I'm doing this, okay? We bought $600 million worth of real estate last year with cash that should have sold for $900 million. I know that it should have sold for $900 million. I know who the buyer was. I know what they paid for it. We paid 2024 We paid 2014 prices. Okay, in 2014, 10 years ago, when the rents were lower, that's what it sold for, and we paid that for it. So we know we're $300 million in the money when we bought the asset. Now, I didn't have $600 million, so I had to go raise it for my investors.
According to the Federal Reserve Bank of Kansas City, multi-prices are down 16% from their 2022 peak.
Yeah.
So they're down nationally somewhere between 20 and 25%.
Okay. 3, so we're in a market correction. It's a massive market correction that nobody's talking about. 4, we have an inventory glut in the marketplace. There's a glut of these assets. You're like, where? I don't hear about them, because you don't have the right places to look. You got to know where to look. Like, you can't find church in a strip joint, okay? You can't find golf clubs at a football stadium. Like you have to go where the action is.
So multifamily starts, according to CBRE, are down 70% from the 2022 peak.
So what he's talking about as starts is he's talking about new build is being reduced, which means there's a glut of inventory, so they stop the new builds. The new builds create a future shortage that is brewing in the marketplace. That means 27 and 28 and 29 and 30 are going to be unbelievable.
Rents are going to spike.
Okay.
Because there's too much demand.
Yeah. Number 5, interest rates are going to come down. Trump's going to take these rates from where they are right now. He's going to drive them into the ground if he can. He'll go to 0 if he has to. I don't know how many of you know what's going on with Japan right now, China, across Europe, all in South America. You have major indications of a recession that could create tremendous momentary driving of interest rates lower. Okay. 6, tariffs are good for people that already own real estate, because if they reduce the amount of the building, if they tariff lumber and glass and concrete, steel, okay, if they tariff that, also labor's a problem to find right now. The less there is to build, or the more expensive it is to build, the better it does for the assets that are existing. Also, we're in a debt crisis. How much is coming due right now?
$625 billion in 2025 alone, mostly tied to multifamily. Distressed commercial real estate is up 31% year over year. And according to CMBS, which is a big lender, multifamily distress is at a 12-year high with 12.9% is the distress rate as of 2025.
This is not something you want to wait until next year to get involved in. If you're going to play this game, if you've ever looked for an opportunity to enter real estate and to start making real money doing this, 2026 is your year. Right now, you just got to get prepared. You got to get your confidence up, your connections up, your understanding and knowing this, and you need inventory. You need to know, where do I go to get the deals, okay? Now, $620 billion of loans are coming due between now and the end of the year, December 31st. Like, if I only do 0.01 of that, 620 billion times 0.01, just 0.01. I mean, I could do less than that. That would be what?
1%.
Huh?
1%.
$62 million.
10.
This is happening. You understand? This is like the old man died.
6.2 billion. No,
that'd be 10%. No, you're right.
Yeah.
No, it's 6 billion. If I did 1%, if I did 0.001, 1/10 of 1%, if you could find 0.001, by the way, these deals are going to trade, folks. Somebody else will own the real estate. The real estate doesn't change. Can you guys pull up the plaza in New York? Just search the plaza in New York. I can probably do it here too if you're connected to me. New York Plaza. Okay, yeah, you see this hotel? Y'all see this? This is probably the best, like, got to be top 10 or 15 pieces of real estate on planet Earth. How old is the plaza? Okay, how many different people you think have owned that? The names change. The real estate will be there 10 years from now, 20 years from now, 30 years from now, 50 years from now. The plaza is going to be there. Could it be a different color? Yes. Will it be a different owner? Probably.
1907.
It's been there since 1907. It's been there 118 years. Guess who owned the plaza at one time? Who knows who at one time owned the plaza? Yeah, that's where Home Alone was shot. Trump owned the plaza. Who owns the plaza now? By the way, it's being traded again. Okay. I think the Chinese, not the Chinese, I think somebody from Saudi bought it from Trump. They bought it from the bank, not from Trump. Trump lost it.
Katara Hospitality, which is a Qatar investment firm.
Yeah, Qatar owns it. Okay, there's times where you go to the plaza today, and the top 4 or 5 floors are all royalty. You cannot rent a room in the plaza. Okay, why am I telling you that? The real estate didn't change. It's 118 years old. The plumbing changed, the kitchens changed, the carpets changed, the color changed, the paint changed, the entry changed, the lobby changed, the employees changed, the ownership changed. But guess what? Through 1929, 1970 oil glut, through 1990 savings and loans collapse, the 2000 internet bust, 2008 housing crisis, all the way up to 2025, and that damn plaza is still there, bang, 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 producing cash flow, okay? All right, that's why, guys, look, you need the data. Where do I find the deals? Where am I looking for deals? If you're not looking at deals like that, if that's not in your stream every day, where's the activity? Where's the real deals? Now, number 2, where can I raise money from, okay? What does that offer look like? We have people come in our office December 15th. Mm-hmm. They're coming in here just to learn from me how to raise $1 billion. I've raised $1.8 billion. Okay. Well, guess what? Raising money starts with one thing. It starts with the deal, the piece of real estate. Okay. Like if you had the plaza today, and this was the Plaza Hotel, and you got an option to buy the Plaza Hotel, could you raise money for it? What if it was a deal? What if it was the deal of a lifetime? It was going to make $1 billion. Let me see how many of you have the confidence you could raise $1 billion for the plaza. You're like, no way, Jose. But there's plenty of money. There's plenty of money. Somebody said yes. Okay, good. Good for you, bro. That's what you ought to be shopping. For all of you that said yes, this is the stuff you should be looking for. By the way, this would be easier to raise money for than one home. Much easier, okay? Now, number 2, let me ask you guys this. You guys that could raise the money or not, How many of you, you're looking at those kinds of deals right now? How many of you are looking at those kinds of deals? All you guys that said earlier, if I gave you $10 million, you could place it before the end of the year. How many of you are looking at those kind of deals? Okay, because that's what I want. That's the kind of real estate I want to buy, because that's where the big money's made. All right. Now, third thing is, how many of you would know how to write the contract? Would you even know where to call a lawyer, how to start the contract? How many of you would know how to write the LOI? Forget the contract. You don't even know what an LOI is. That's why we need to get you the data, okay? And I need you to get you off this house, because if you're going to go buy 2018 20th Street in Lake Charles, Louisiana, it's a little red brick, 1,400 square foot, and you're like, oh, there's a great deal on it. It should sell for 400, but it's only 386. It's a great deal. Great. Then you're going to make 20 grand. I'm not putting money in that deal. I want you guys to make $1 million on a deal, okay? All right? So right now, real quick, just after the first little bit, okay? What are you thinking with different right now than when you came in here? Okay, somebody said ChatGPT can probably do it. Nah, ChatGPT cannot tell you where to buy this real estate, okay? Everybody, what's your big takeaway so far? It's got to be multiple units. Yes, you need multiple units, because the multiple units give the investor the security that they can put the money in the deal. Somebody said, man, I could use the down payment with a big earner just to provide them with tax depreciation and keep the deal for myself, 100%. Okay? Everybody's like, think bigger. I need more information. I need more confidence. Okay? Okay, good. So let's set you up. Let's set you up now. Why you want to buy this asset class, okay? Why you want, now the next thing I'm going to show you guys is not just for you. Again, everything I share with you today is not just for you. It's for, like, how am I going to tell my investor or bank or my wife, okay? Or why am I doing this every day rather than some other hustle, okay? You could be setting up some e-commerce store on Amazon. I'm like, you go work your e-commerce, bro. I'm going to find one deal every month. I'm going to raise the money for that deal, and I'm going to make me and my investors $12 million next year. You understand, if I did what I showed you earlier, one deal, it's 32 units. If I could simply, without doing anything, just raise the rents $200, I make $1,280,000 on every one of those deals. I could give my investor 100 of it and keep 280 for myself. I keep this, you keep the $1 million. Whatever deal you want to do, I'll split it with you, okay? I'll give you your money back plus the depreciation, and I keep the upside. Whatever. Then I make $1 million on every deal. If I did one of these 12 times a year, and you could, by the way, they're out there. I guarantee you they are. I'm not buying these. Okay? You could make yourself $114 million in a year. But you can't make that on a house, okay? Right? So why this rather than NVIDIA? Why this rather than Amazon? Okay? Because if you buy Amazon stock, you can only buy that with your money. You can't get Jared. You can't go to your Uncle Jared, and Uncle Jared's rich, and say, Uncle Jared, let me invest your money for you in NVIDIA and Amazon, and I get a split. He's like, bro, I just go to Merrill Lynch and do it with them. I'm not giving you a split. Okay? This is why real estate works for raising money versus stocks. Number one, it cash flows. Number two, you want to write these down. Number two, you have capital preservation. Why is that important to the investor? Because they're like, I can't lose money on this deal. I just bought this deal. Let me see, where's it at? See this deal right here? Look at this beast. I mean, this is pure beast-like. This is just sick real estate, okay? Okay, look at this. I mean, you are looking at this. Look at this little, if there's a little car down there. You see the little truck down there? Right here? I don't know if you guys can see the little truck with the car. This is a monster building, takes up the entire block. So this deal came up. It was going to bankruptcy. It was $235 million. Can you pull it up, Jared? Can you pull up the
It's on. The deal?
No, the actual transaction. Pull it up on the news.
Oh, yeah.
Okay, watch who I bought it from. You guys are like, oh man, oh, the big companies are buying everything. Oh my God, the big companies, the big bad Blackstones and the big bear's taking advantage of everything. Dude, you guys got to quit complaining. These corporations have as many problems as you guys do. Sometimes they have more problems. You see it? I can do it if y'all can't.
I got it. It's on my computer.
Grant Cardone, Penn, Florida, completed $230 million purchase. This is this year, July 18th. Go down. Who did I buy it from?
Go to my computer, guys.
Yeah. Who did I buy this from? What does that say? I can't see.
Blackstone Mortgage Trust.
Oh my God, Blackstone, one of the largest corporations on planet Earth. They have $1 trillion under management. And I bought it from them out of bankruptcy. So you guys are like, y'all got to quit blaming other people, man. Oh my God, the big bad Blackstone. Yeah, bro, the big bad Blackstone's got the assets that you want to buy. This thing came up for $235 million, and I bought this with no money. You want to have your full attention, okay? We have 500 investors in that asset. That happened this year, and I raised all the money in 10 days to buy that asset out of bankruptcy. Now, here's the cool thing you don't know. I have a contract on it right now. I have a first right of refusal for $300 million to convert it to condos. I have 2 other people interested in that as well. We had 18 other buyers, all of which probably had as much or more money than I have. And I got the deal. Why? Because I know how to work the deal. I know how to get into the flow. I know how to set up the LOI. I know how to pitch this deal to the sellers. I know how to persuade them, and that's what I want to share with you guys. Okay? By the way, congratulations for everybody that's calling our office that took advantage of the call-in. GrantCardone.com/now. It included the millionaire booklet, the multifamily booklet, the how to create wealth investing in real estate booklet, the workbook. I'm going to spend 2 days on this workbook. In 14 days, I'm going to do that online. I'll do this live with you. I'm going to take the 90 minutes we did today, and we're going to do like 4 or 5 hours on a Saturday and another 4 or 5 hours on a Sunday. And you get the recording to this, and we're going to show you exactly how to find it, slow everything down, go into detail. Also, you get to call into our office. So we're almost tapped out on those calls. If you want to take advantage of it, the first 100 people we said would get a call, GrantCardone.com/now. I would give it to everybody. But I can't because I'm going to run out of people. GrantCardone.com/now. Take advantage of that. Tell them where you're at, how much money you have, what your knowledge level's like. If you have flipping experience, a wholesale experience, or Airbnb experience, or maybe you've been tinkering with multifamily, or maybe you're in Cincinnati, or maybe you're in Singapore. Everybody's got a different path to the same math. Okay, so I'm going to show you how to do the math. We're in real estate. We're talking about real estate, and we're talking about why real estate rather than stocks or rather than Bitcoin, okay?
How long did it take you before you really were like, I got this?
I mean, look, I don't know, last week.
Yeah.
I'm learning all the time. I'm learning new stuff all the time doing deals. When we did that deal, Jared, in July, and we took that from Blackstone, I'm like, oh, dude, I should be doing more of these. I didn't know that. That was the first time I'd ever done that. But I'm able to share all that data with you guys. The first time I did one real estate deal and bought it with $3,500 down. 20 days later, I bought another asset with no money down. I didn't know the first time what I didn't know the second time. But I did know this. I had cash flow coming in. Okay, very, very difficult to raise money if you don't have cash flow. That's why cash flow is so important. You want the cash flow to tell your dentist, your doctor, your car dealer friend that doesn't have the time, by the way, to shop real estate because they're selling cars, they're doing root canals, they're doing chiropractic, they're doing ears, whatever it is, they're going up into the rectals and they're playing with stuff and they do their job. They're a nurse or they're a policeman and the policeman's arresting people at night. He doesn't have time to do real estate in the weekends. So I go to him and say, dude, I got the time. I got the time, I got the knowledge, I got the confidence, I know what I'm doing. I'm prepared, I'm trained by Grant Cardone. I've done $5.2 billion worth of real estate that we still own. Okay, we sent out $100 million to our investors this year. We sent $66 million back plus the 100 for a refinance event and did another refinance event that did 424% return to the investors this year. Another deal did 240% return to a group of investors. These deals are 8 or 9 years old. Like, you get a track record, you start getting more confidence. We just need to get you guys, we need to get you in the game, okay? Why? Why do you want to do it? Number one, cash flow. Number two, capital preservation. Why would the guy want to give me money to invest for him? Or why would you want to take your money out of your IRA, out of your mutual fund, your T. Rowe Price, your Merrill Lynch, your Fidelity, your Vanguard? You got $80,000 over there. You got 180 or 800,000. Why would you want to grab that money out of the stock market and put it into this asset class that I'm talking about? One, because there's a big correction going on. And you're going to steal this real estate. There's a once in a generation, once in a lifetime, literally every 10 or 15 years this happens. But you still need cash flow. That's good. Your IRA would start bringing money in every month rather than just leaking money out. Number two, capital preservation. You don't want to lose your money. NVIDIA stock, how much does it drop this week?
It was at 194, and I think it was at 181.
Yeah, so it's coming down. Bitcoin's dropped from 126 down to $80,000. It's lost a third of its value in the last 2 weeks.
Oh, it's 178.
Yeah.
It broke 180, yeah.
What is Chipotle worth today? Chipotle or Beyond Beef?
Chipotle's 31.
$31. Chipotle was $131. Look at this thing. Go back a lifetime chart on it. Chipotle. Go max. Go max out. Okay, go back, what is that, 5 years? Can you do the 5-year chart?
2024, it's the, yeah, that,
Do the 5-year
this
chart.
lifetime, yeah, it's all the way back to, it
Okay, so.
was up to $80.
Yeah, so.
It's split, they did split though, because they.
That's fine, it's 80, what's it at now?
31.
31, you've lost $50 a share. You've lost 60% of the value of that stock. If your mutual fund was in at 80, go to a Beyond Meat, whatever that fake meat company is. Okay, look at this
86 cents.
Go to 5 years. It was $126 at one time. What does that say?
It was $178 in January of 2020.
Yeah, $178 is worth how much? $1. It's going to be delisted, dude.
It was at $234 in 2019.
Go to SBET, SBET. It went to $125. This happened this year, okay? Stock goes
$9.52.
Yeah, it was at $125. This year it went to $125. It started this year and now it's trading for $9. Okay, go to strategy, MSTR. It ran up to 450.
170.
Okay,
year to date.
Just do this year to date.
Looks like 450 was the high this year.
450, and now what's it at?
170.
It's lost $280 of its value. 40% of its value is gone this year. 60% of its value this year. Now watch. When you buy a piece of real estate that produces cash flow, you're not going to lose your money, okay? When I bought that big property, that $235 million property, right? I'm not going to lose the value if I don't over leverage the asset. 3, I get major tax benefits. So this is another reason why you want to do this kind of real estate. You and your investors get tax benefits, number 3. Number 4, you get to control the appreciation on the asset. You cannot control the appreciation, upward value. You can't force appreciation on a stock or Bitcoin, but you can on your real estate. How do I control appreciation? Okay. Well, imagine if I did this. We had a property, 366 units. You with me?
Yeah.
Okay. We had a property, 66 units. We had 60 vacant. It was 306 units occupied. If I can occupy some of these units, do I increase the value of the property? Help me out in the chat. We bought this in July. We had 32 rentals, 32 at $4,500 a month in the first 90 days of ownership. Okay, now let's do some math. I'm going to show you guys this math because this is math. Okay, real estate is math. It's a real asset, and it's got real numbers to support it. That's why investors like to put money in it. So check this out. Take the 32 units times, everybody do this. Grab your phone, grab your tab. I'm going to wait till you get your calculator. Go ahead. Okay, 32 units, 32. 32 is what we added. Forget what we bought. Okay, we took 60 of the vacant and went and promoted them on my Instagram. I'll show you the promotion we use here in a second. Get the Mandami special ready. 32 units times 4,500 and then multiply times 12. What number did you come up with? This is a little math. You're going to use this with your investors, by the way. This is called increased value calculator. 32 times 45 times 12, and I'm going to divide that by 0.05. How much is that?
34 million.
I've increased the value of that property by $34 million since I bought it in July. Okay? So you should have come up with $1,728,000 of new income, and now divide that by 0.05. I could make a case.
Which is the cap rate.
Yeah, that's the cap rate. I could make a case that it's actually a 4 cap. And we increased the value, $43 million. This is a 4% or a 5%, okay, depending on what this thing's going to sell for in the future.
And that's basically the return being paid to the investor on their capital.
On the new money that we increased it, okay? We paid X. When we bought it, we paid X. There was 18 other bidders on the asset. We paid X. I know when I buy it, and they all bought it, they all were looking at the thing at about the same value I was. One group offered $275 for it. We were at $235. They didn't take the $275 because the guy couldn't close in 10 days. And I proposed a close in 10 days. And when you're in bankruptcy, the bank has to take the fastest close. Okay, they don't have a choice. I had the confidence I could get the money for my investors and my bank or whatever. I knew I had the confidence. I knew this thing would make money, so I was willing to put my money in. And I also knew I knew how to promote the deal. So we started running Mandami specials. See the 10X Boca Raton Mandami special? You see the whole ad there? Does it say in the ad? This is smart, right? No property taxes, no state income tax, no gun permits, and no TDS tolerated on the property. Also, no communism. And the only thing you pay extra for at the 10X Boca Raton property under the Mandami special are golf lessons. You want a golf lesson? So we're actually trying to get people from New York down to the property. We brand the property 10X. We cleaned it up. We power washed it. We start fixing up the lobby. My wife's over there today putting new furniture in the lobby. They had none of the units. None of the units had there was no model unit, even though there was 32 units vacant, 60 units vacant. Yeah. Okay, they did not have a model unit, so we've added 3 furnished units. By the way, our furnished units are not getting $4,500. Check this out. We spent some money on furniture because sometimes people come down here, they want to live here for 6 months. They don't want to buy furniture. The property's getting $4,500 a month. We've gotten $5,800 for furniture. 1,300 times 6, 0, 0, 18. So if I'm spending $7,800 on furniture and getting it back in 6 months, guess what? I own the furniture for free. And guess what the furniture comes with?
Depreciation?
Tax write-off. Okay? But now I have a furnished unit. Let me ask Ryan something. Call Ryan. Okay, but you're like, why am I not doing this? Because you don't know it. Nobody's teaching you how to do this. Starwood isn't going to teach you how to do this. Related, a big billion-dollar company is not going to teach you. Blackstone's certainly not going to teach you this. Hey, Ryan.
Yes, sir.
How much did you get? How much extra did you get for those furnished units over at Boca?
We got $1,700 to $2,000 extra per unit.
Yeah. How long are those leases for?
Well, initially it was for 6 months, but I think they want to do 12, so it's between 6 and 12 months.
Yeah. Okay. Thanks, Bob.
Cool.
So what we did, we were successful with one of them. We'll do another one and another one and another one. So we end up with, let's say we do 5 of those. 5 times 2,000 times $2,000 times 12 divided by 0.05. Then I'll make $2.4 million for our investors because we furnished a unit. Like, this isn't brain surgery. Like, we're not doing anything new. We're just actively paying attention to this property. Now imagine if this was your only hustle. Or imagine if in 2026 you're like, hey, right now I'm selling whatever, okay? Or I'm online, or I'm flipping stocks, or whatever it is you do every day, okay? You're doing hairs, you're doing hair extensions, you work in a beauty salon, you do video editing, whatever it is you're doing, you're in a barbershop. But what if you committed to the next 45 days, I'm going to learn everything Grant Cardone knows about real estate. I'm going to learn everything he knows about real estate. I'm going to put my head down between now and the end of the year, learn everything Grant Cardone knows about real estate. And then in 2026, I'm going to be prepared to start buying stuff. Next year, let's say you only do 1 deal every 3 months, 4 deals next year. And each of those deals makes $1 million. Your world's changed, okay? By the end of 2026, you're playing a different game now, okay? So that's what I want to get you in the game for. But you got to know how to tell this story. Why do you want to buy real estate rather than stocks? Why does your investor, your uncle, your mom, your brother, maybe somebody that has money, why do they want to do this with you rather than stocks? 1, cash flow. 2, capital preservation. 3, tax benefits. 4, controlled appreciation. 5, you get to cash out, not sell out. What does that mean? Okay, you know this property right now that I told you about, that property, the one I bought for $58 million. We financed $43 million. Let me see if I could. 58. When we bought this real estate, the NOI was for about $3,500,000. That was the NOI when we bought the asset. Okay? Let me just do a little math here. What is the NOI on that thing now? Let me just go to my sheet, so I'm not making it up. Active deals. See these deals? See, I'm going to go by my NOI, and let's see, NOI. NOI is the number between the income and the expenses. There's a number called NOI. Okay, the NOI is what determines the value of the real estate. Now the NOI, see, my acquisition was 63, not 58, because we added some money for capital expenditures. Let's see here. Oh yeah, see this? My NOI today is $14 million. That's what it's gone up since when we bought it. Let me just see if I have this math right. 66 million times 0.06. Yeah, it was $4 million of NOI. This was about $4 million, okay? We've raised the NOI $10 million in 12 years. This is what determines NOI. You want to write this down. NOI determines value, not the neighbor. This isn't what the neighbor sold for. The NOI of the property is the NOI goes up. Why does the NOI go up? Because the rents went up. If the rents go up, or we were creative, we painted it, put palm trees in, made it look better, took care of the tenants. Maybe we offered our tenants to become investors. As the NOI goes up, if you divide $14 million divided by 0.05, it's worth $280 million. Okay, what did we say it's worth? Oh, there it is, $267 million. I didn't do anything. Okay, by the way, this thing went up $200 million in 12 years while I wrote books, spoke on stages, ran my other businesses. All I did was make a decision. I made a decision to move this money over here out of a single family home and out of a retirement account, and talked my sister into it and Jared into it. I took their money, I managed an asset purchase, and I waited for this thing to go up in value. Okay, number 6, 1031s. 1031s is a tax benefit that I'll be talking about later before we close out here. And we're going to do a bunch of questions. Where are we at on the timer, guys? I don't want to kill people today.
Yeah, we need to
Okay, good. I got to. 7, it's scalable. It's scalable. I can do this over and over and over again. Number 8, generational wealth. You're talking about passing generational wealth onto your family. That's what I'm telling you. Why real estate versus stocks? Okay. In these 90 minutes, this is what I'm going to do. Show you where to find the deal. I'm going to show you where to get the debt. I'm going to show you where to get the equity. I'm going to show you where to actually network with other people. And number 5, how to have confidence. These are the 5 things you have to have in a real estate transaction. These are the only 5 things you need, by the way. Don't complicate this more than this. You need a deal. You need debt. By the way, it's in this order. You need equity. That's cash or money. Okay. You need confidence. I'm sorry, that's the last one. And you need a network. What's the network mean? The network is you're going to have an appraisal, a real estate agent, a broker. You're going to have a flow. You're going to have a relationship with these people. It'd be super cool if you had me and my money. Or you're going to have a bunch of investors and their money. Okay, it'd be great if you had a track record. But right now, the first thing you need is a deal. Okay? What are you looking for? When you end today, okay? When you end today, when this stops, when this ends in the next 30 minutes, what are you looking for? How do you find a deal that makes you $1 million in profit? 1 million. I wouldn't even fool with a deal that didn't do that. Like if it doesn't make $2,000 cash flow, at least $2,000 cash flow, $2,000 for you and your family. If it doesn't do $2,000 and $1 million, I wouldn't look at it. So for all of you, real quick, that want to take advantage of a 2-day event with me, okay? Spend 2 days learning how to find the right deal, where to find the right deal, how to set that right deal up, how to get financing on it, how to raise money, how to find off-market deals, on-market deals, expired deals. I'm going to give you 2 days with me. It's $3,000. I'm going to give it to you. I'm also going to give you a one-on-one strategy call until we're loaded up and can't take anymore. We got spots for about 30 more people. And I'm going to give you our multifamily dictionary, all the terms you need that I might be buzzing over you right now. You're like, bro, there's a lot of data. It's not actually that complicated. Or you can call in if you want to talk to our office, 310-777-0255. This is the dictionary, okay? So these are the words. This is the NOI. What is an NOI? How do you figure the NOI? There's a bunch of terms you need to know and you need to be able to use with your investors, with the bank, and with the brokers. Talking to these brokers, man, is an art. And I have perfected the art. All these brokers know me because of the deals that I've done. Remember, I started with no money just like you did, okay? In fact, I started on this deal with $3,500. Okay, single family home. This is 95? 3? What year was this?
No, it was 86.
Check this out. First deal I ever bought, 1986. 28 years old. I bought this deal for $3,500. Guess what the rent is on that deal today? Let me see the rents. Bel Air, Texas, 1117 Sheffield. Jason Keller says $4,000. Let's see, we got 3,500, 2,500, 2,150. I'm going to call out the right one here. When I see the right one, I'm going to call it out. 3,200, 36, 2,800. It goes to George. George is right. The rents there now are $2,800 a month. 2-bedroom, 1 bath. The only thing that's changed on that place is the roof. That's a new roof. Same neighborhood, same damn tree in the front yard, same sidewalk, same everything, guys. Same ceiling, same kitchen, everything. Okay? I bought that in what, Jared?
1986.
1986, okay. What is it? 2026. What is that, 40 years?
Yeah.
Somebody's been getting cash flow from that thing for 40 years. Imagine, $2,800 a month. What do you make every year? 2,800 times 12. That's $33,000 a year. What did I put down? $33,600 of rent per year, and I bought it with $3,500 down. Okay? Second house I bought this house with no money down. The address is 5422 Brayburn in Bel Air, Texas. What do you think the rents are today? Let's see the rents. We got Jason at $3,500. Nope. $3,200. Nope. $2,900. Nope. There we go, ladies and gentlemen. We have the right answer at Go back. $4,600. That's right. If you can even rent that. You looking it up right now? 5422 Brayburn. Might be more than that now.
5422 Brayburn.
That's why it might be more,
sale.
because they tore it down. They tore this house down. They paid me. I made $30,000 on the house. I put no money
It
down.
says $3,000 a month. $3,000 a month and 1.5 million.
Yeah, no, I don't believe that. Yeah, maybe.
It's just his estimate. It's not.
Okay.
You know.
Yeah, it's not right. It's probably not being rented right now. Yeah. And Arthur says this is the good old days. No, bro, this is right here, right now. This is happening right now. Okay, you guys can buy these things right now. They're all over the country. I can show. In fact, I'll show them to you here in a second. Just stay with me. Third deal I did. I'm 31 years old. I quit buying the single family units. I started getting some confidence. What happens when you get confidence?
Make bigger bets.
Exactly. I got me some confidence, started doing some homework, got a mentor. I spent 100 hours. Watch this. I spent 100 hours studying. I got a mentor, a coach. My third deal, I put $350,000 down that I didn't have. What do you guys keep hearing over and over again? Okay, I'm buying real estate. I don't have the money. I'm not keeping the money for buying the real estate. I borrowed the money from other people. I borrowed the money from credit cards. I bought this particular deal because it was about to go to foreclosure and an auction. This guy had paid $5.1 million for it. Okay, I paid $1.9 million for it. The bank gave me a loan. It was the easiest loan I had ever gotten in my life up to that point. They lent me $1,600,000. Oops. $1,600,000. They said, Grant, if you can come up with $350,000, we'll give you the rest. Okay? What's the rent there now? Can you tell the rent on that deal? I think the rent's $2,600. There's 48 units times 12. Just the income on this deal. Do this math, guys. Get your calculator out. You're going to have your calculator out. Everybody grab your calculator. Do the math with me. What does it say?
It's my internet's just loading right now.
Okay. Here's the asset, by the way. It's on apartments.com right now, and guess what it says? This property is currently not advertising on apartments.com. Probably because they're full. Let's see here. Let me see the Woods Apartments in Vista, California. Couldn't even build this again. The same property's still there today, by the way. I guarantee it's the same color. There it is. There's the color. 2 beds, not available. 1 bedroom, 1 bath, not available. 650 square feet. Same 650 square feet, same color, same blue. Look at it. Beautiful little deal. Probably a different roof. Every 30 years, you got to put a new roof on. It's been 30 years. Let's see what the rent is here, Jared. Can you tell?
It was $2,750 last time we looked. It was $2,750. The range was $1,900 to $2,750 depending on the number of bedrooms.
Yeah. Okay. So let's just do the math. Okay. I got 48 units. It's full. That's why apartments.com and rental apartment finder, they don't have anything rented because the place is full. So we're going to take 48 units times $2,800 times 12. That is how much you come up with. 48 times 2,800 times 12 equals $1,612,800. Okay, we're going to take 70% of that to get the NOI. $1,128,960. So $1.1 million. Divide that by 0.05. Property's worth $22 million. $22.5 million today. Okay? Check this out. This is, and you guys are like, oh, good old days. This isn't available anymore. Yeah, it is. This is available all over the country. It's available in California right now. Okay? I put $350,000 down on this asset. It's worth $22 million today. And it paid somebody cash flow the entire time. Okay, who owns this? An investor. That's what you need to become. You need to become an investor that's buying these kind of assets, okay, before they're not available anymore. This is how I started. I started with no money. First 2 deals I did, it took my net worth to 200 grand. Okay, 1986, I think that says 86, right?
Yeah.
Boom, I went from zero net worth to $200,000 in net worth, okay? In 1995, by 1995, I had 48 units, then I bought 38 units, then I had 220 units. By 2005, in the next 14 years, I would have 380 units. In 20 years, in the first 20 years, I had 600 units. My net worth went from zero to $38 million in net worth. Okay, now let me ask everybody that's watching right now. We have 53,000 people that registered. How many of you would do whatever it takes, would give up whatever bullshit time you're doing right now? You'd get a mentor, you'd get the training, you'd get the education, you'd spend time walking real estate. If you could create $38 million in net worth and you had to spend 10 years doing it, how many of you would do whatever it takes? Let me see a big yes if you guys are in. Hell yes. Great. First thing you should do is go take advantage of grantcardone.com/now. Let me be your mentor. Let me be your coach. Get a call in today. Tell my coach, tell our team where you're at, what market you're in. Do you have any money? Do you have any financing? Do you have a good credit score? Do you have a bad credit score? Do you know anything about real estate? On a scale from 0 to 10, Grant, I'm like a 3. But I know where to find stuff because I'm a real estate agent. You're already in the game, okay? Or you're in Cincinnati. You want to know what to look for, where to look. You don't know who to call. Maybe you know where to look, where to find a deal, how to talk to the brokers, but you don't know how to get a loan. You don't know where to go to get a loan. I will share all that with you in this, and we're going to get you this course, the fundamentals. They don't start with anything. Okay, so we're going to get you this multifamily course, this real estate course, which is telling you how to start in the game. I'm going to get you this resource book, and in 14 days, we're going to just start walking in. How do you find the deal? Who do you talk to? How do you talk to them? How do you pitch it? Then, boom, how do we go raise money for the deal? Okay. In between that, we're going to know what lender to go to. The deal, and I'm going to show you what Fannie and Freddie are doing right now. Fannie and Freddie want to push money at first-time buyers. What's the name of that program right now, Jared? That's the 5%. On the limit, $1,280,000.
It's $1,396,000.
It's $1 million up to $1,400,000. They are pushing money out on 4 units, 5% down. If you had 50 grand, you could buy a deal at about $1.5 million. Okay, we're going to start this class. What's the date?
This is going to be December.
How many days from here now?
It's 2 weeks, so it's December 6th.
10 days or 14 days?
6th and 7th. So it's
how many days is that?
2 weekends. Not this weekend.
Oh yeah, the next one. It's not even 14 days.
It's like next weekend. It's the weekend after.
It's like 11 days.
Yeah.
In 11 days, I'm going to come in on a Saturday and a Sunday. We're going to spend 4 hours. I'm slowing it. How many of you'd like me to slow all this down for you, so I'm not just running over you? Okay. VA loans, Fannie Mae loans, Freddie Mac loans, 5% down, a veteran administration loan, okay? How about no money down loans? How about other people's money? How about CMBS loans? How about we just slow everything down and go over where to look, when to look, what to buy? But right now, I just got to get your head wrapped around, what do I need to learn about? You need to learn about one category of real estate. If you go to the next slide, can they see this? This is what got me hooked. My mentor, who is no longer alive, Sam Zell, he was worth $5 billion. Okay? This is what got me. He showed me a graph like this. I was reading his book, okay? And Sam's like, look, man, the reason he got into real estate, he built one of the largest real estate portfolios on planet Earth. Mm-hmm. My first mentor was my uncle. He was doing Section 8. Okay. My next mentor was the real deal. He's like, look, if you look at this graph, there's only one of these to invest in. You got apartments, self-storage, mobile homes. You got retail, office, single-family homes, mansions, farmland, and empty lots. Go for the green dots. The more green dots, the better. This is where it's easier to raise money. This guy raised tens of billions of dollars, by the way. He was one of the first REITs, real estate investment trusts, in the world. Okay? And then I learned about the $1 million profit formula. Let me give you that formula so you have it, so you guys can use this.
This is the qualifier you guys should be looking for when you're out looking at deals. And so in a minute, what we'll do is we'll actually get in, we'll actually show you guys some deals that are available on the market that aren't $235 million. We're gonna do some of that so you guys can see that. But this is the qualifier. You got to be looking for $1 million score. Grant has some rules that we'll cover here, but like you need to look for a deal that's going to make you $2,000 a month in cash flow, and rather $1 million profit. This is the formula. You can literally take the number of units, you can multiply it by the rent increase, you got to multiply it by the occupancy, times 12 months, divided by the cap rate, and that's going to give you the increased value of the property. It's a very simple formula. It's right here. You guys can snapshot it, screenshot it, take a picture of it, do whatever you want. And you can go on to some resources like we're about to show you right now on where to find deals and just start running the math.
Yeah.
It's going to take some time, guys. Like if you came here thinking you were going to learn from zero how to take a real estate deal from soup to nuts today in 90 minutes, you have the wrong expectation. This is like Grant is a lifelong student. That's how he's been able to accumulate $5.5 billion.
I've spent tens of millions of dollars. Tens of millions learning this game. But look, I made all of it I made tens of millions on one deal. So you just got to know what to look for. First two deals, I made money on the first two deals. The third deal, I made $5 million on. Look, you want the third deal, not the first two deals. Okay? So watch. Let me just show you, for those of you who think the good old days are gone. Okay? I'm going to just show you. I pulled this up this morning. This is a deal in Minoka, Wisconsin. 344 grand. You can buy that with 15,000 bucks. Nice looking little deal. That's called, what's that called? That's not called Cedar Shake. It's called, there's a certain name. It's an English name, but I can't remember. I bought one like this in Chula Vista. It's got this roof. Anybody know what this is called? Mansard. It's a mansard roof line, or Tudor. Exactly. Okay. Here's 4 units in St. Cloud, Minnesota. Great market, by the way. You can buy that deal today with 15 grand. This is not even an auction. Okay? Here's a deal in Savannah, Georgia. Cute deal. Look at this. You could buy this deal. Now, this deal's got a limitation on it. This deal would be...
You've got to zoom out. Yeah, there you go.
Okay. This deal's $1,650,000. Let's see, if I put 5% down, Jared, how much is that? 80,000. And we would be financing what, Jared? 1,557,000.
Yeah, so you're going to have to come up with an additional.
So you're going to have to come up with an additional how much?
750.
No, what I would do.
But you just do a 20% because you'd come up with 320.
Well, no, what I would do is I would put the 80,000 down, the 5% down, and I would get the owner carry the other 100 grand.
There you go.
Okay. And then I would finance the $1,470,000. Because what Jared's telling you is there's a limitation on that Fannie Mae loan. These are being pushed into the market and you have no competition for me. I'm not buying any of these, okay? These deals are too small for me. I need 300, 400 units at a time for me to consider doing a deal.
And there's math, like, look, you guys are learning the math right now. Like, yeah. I went through and I ran the math because Grant and I always talk about, like, man, we spend so much time talking about the deals because these are successful deals. These guys never lost money on a real estate deal, right? And so we always go back and forth on, do we show all these small deals? Because the small deals just require a different type of work than buying a 32-unit deal. So the different work is you are actively managing a 4-unit deal. You're probably living in a unit, okay? You get 32 units, the property management company is taking care of it. You don't have to worry about that, but now you have to raise a little bit more money. But I'll tell you this, the math on 4 units, if you occupied one of the units and every year you bought a 4-unit deal and you lived in it, you'd take 5 years of your life. And you'd have to move 5 times, big deal.
Yeah.
But at the end of 5 years, you'd have 20 units.
Yep.
And if you were able to raise the rents with market adjusted rents, just going up with inflation, you would have $1 million at the end of 5 years.
Yeah,
so it's just a different path to get there.
Yeah, it's just a different way for you to do it. Like, how much tolerance do you have? You're like, I'm going to start with 4 units because I'm scared to death. And you don't want to lose your brother's money or your uncle's money or your dad's money or your own money, right? So let's say you went and did this St. Cloud deal, okay? This is how the deal would work. That's why you need to know the math. You don't have to go do 40 units to start. You don't have to do 400. I would, I would tell you to do it too if you had the confidence, okay? But at least if I get you in a situation where you're out looking for 4 units and then you stumble across 40, then you're going to know how to do the math. If you don't know how to do the math, okay, this is what I want you to do. I want you to look around your room right now, the room you're in right now, and look for the color yellow, okay? Look for the color yellow, anything in the shade of yellow, okay? All right, everybody do that? Look around the room, yellow, yellow. I see some yellow, yellow. I see some yellow over there on the wall. I never saw that before. Okay, let's see, yellow, yellow. Jared, you got any yellow on? No, Jared doesn't have any on, okay? All right, how many different yellows did you see? $22. You guys in some mustard, okay? All right, now close your eyes. Everybody close your eyes, okay? How much blue did you see? How much blue did you see? Open your eyes now. Without looking, how much blue did you see in your mind's eye? Yeah, not a lot. You know why? Because you weren't looking for it. Unless you're in a blue room. Somebody said a lot. They're probably in a blue room. They're in the baby's room, okay? What I'm telling you is, dude, what you guys look for, what you look for is what you see, okay? Whatever you're going to look for, if you're looking for 4 units, you're going to see 4 units. If you're looking for 40 units, you're going to see 40 units. If you're looking for 400, I don't want you to look at any of this. This is what I want you to look for. I want you to look for this. $1 million for every deal, okay? Or $1 million. I just want you to find $1 million. If you got to do 4 deals, that's what Jared was saying. If you got to do 4 deals to get to the $1 million, who cares, okay? So watch, let's take the Savannah deal. And let's say that Savannah deal at $339,000. I'm like, how do I make $1 million in that deal? It's just math, okay? I could show you the math. The math is the path, okay? We have $339,000. I need to put $16,000 down to buy this. I'm going to finance $323,000. Okay? Okay? Can everybody find the 16 grand? If you think even if you don't have the money, how many of you believe you could raise $16,000 if there was, yes. Okay, good. Doable deal. We can figure it out. Now, you guys that have bad credit, how am I going to get this loan? Not even a problem. That's why it goes like this. Deal, debt. It goes find the deal, then you find the debt. You don't do the math first. You find the deal, the best deal, and the deal will always support the debt. Then you worry about the 16 grand.
And that's completely backwards compared to how most people approach real estate.
Yeah.
Most people start with how much money do I have?
Yeah.
And it's the wrong way to look at real estate.
Yeah.
Because look, the banks that give loans on these properties, they make money loaning money. They have to give money. That's their job. It's their mandate is to give loans. And they're only going to give loans on good deals. And if you can't get a loan on the deal from the bank, you're going to have to raise all the money from the equity and from your investors. You're going to have a bigger problem later. So if you find a good deal, the bank is going to go, we want to invest in that money. They are your biggest partner. They are your biggest investor in the deal.
Yeah.
So you got to find a good deal, take it to the bank, say, this is the bank, this is the deal, these are the financials, this is the occupancy, here's the business plan, give me the $16,000. They're going to go, okay, good, checks the box. Or give me the $323,000. They're going to check the box, they're going to issue the loan. Now you got to go out and you got to find the money. And you typically have, 30, 60, 90 days?
This deal, you'd probably have 60 to 90 days to figure this whole deal out.
To raise the money.
First thing you got to do is you got to call Scott Smith. Scott, tell me what the deal is, okay? You got to know how to talk to Scott. How much you want. Never ask about the price, okay? You don't have to worry about the price. Price is the least of your problems, okay? Like finding the right asset is the biggest problem. And then how do I get this guy on the phone to talk to him? How do I communicate to this dude, okay? So watch this. Check it out. We have 2 apartments that were substantially renovated in 2014. Oh, that's 10 years ago. Man, that's good. That's good. I wonder what it sold for. Maybe you can look it up. This thing's only $84,000 a unit. I already know I'm in the money, okay? Let's say the rents are $1,000 but should be $1,200. I want you to take this math. Do this math. 200 times 4. Let's say the rents are $1,000. At $1,000 and we're paying $84,000 a unit, I'm already in the money. I already know I'm making money. How do I know that? Because I know what I know. Because I did thousands of hours of research. You guys just need somebody you can lean on. Okay, so watch. The $1,000, let's say we're going to raise the rents to $1,200. I know the rents in Savannah can be moved $200. I know the market because I own assets over there. 200 times 4, what?
I think they lost this deal.
Yeah, probably did. Okay, 200, if I raise the rents 200 a month times 4 units and divide that by 0.0, what did I say? 4 times 12. Divided by 0.06, I make $160,000. Okay, now I make $160,000 of profit by raising the rents $200. Now, how much did I pay for the property? 16 grand. That's 10x. You're like, yeah, but you said you were looking for $1 million. $1 million, 160,000 at a time. And by the way, that was in the first year. I could flip this off right now. I could literally go refinance this asset next year, get my 16 grand back, give it to the investor. Here, uncle, here's your 16 grand back. Here's another 16 grand, and you guys could keep $140,000 for yourself. And check this out. You guys understand what I'm saying here? You would take the asset next year. Follow me through here. Okay, we paid $340,000 for it. Now it's worth 160 more. So now the asset is worth 500 grand. The asset is valued based on the NOI, not based on the neighbor. This is not a house. Now the asset's worth 500 grand. I go back to Fannie Mae and say, hey, I need a new loan on this deal. And they're like, yeah, sure, we'll lend you $450,000 on it. What do we owe?
We
owe $323.
$323, yeah.
Watch this. We owe $323. I end up with $127,000. I give my uncle his 16 grand back. Maybe you give him another 16 grand back. You have 100 grand in your pocket, and you still own the asset. You have $500,000 on your net worth statement. You got a Fannie Mae loan for the next 10 years. You have 100 grand in your pocket, and you paid your uncle back, and you own this asset. Yours. It's yours now. Now, if you're going to get rich, folks, there's a thing called schedule of assets. Okay, this is what rich people have. They don't have credit scores. Okay, we should make a video of this. Okay, oh man, well, I need my FICO score fixed. You shouldn't even have a FICO score. Okay, you should have a schedule of assets. If you want to get rich, rich people do not have FICO scores, credit scores. They don't worry about them. They don't look at them. They don't think about them. They don't care about them. They got this, the SOA, schedule of assets. What's a schedule of assets? I'll show you. Go to my computer here. And again, we're just giving you my playbook, guys. And I don't know everything there is to know about real estate, but I'm going to give you everything I do know about it. There's my,
it's the Excel.
See this? I'm going to give you this. This is all my working deals right now.
What we'll do is we'll give you guys a copy of this deal tracker for everybody who takes advantage of the opportunity today. We're going to give you guys
my spreadsheet,
a deal tracker so that you know how to start tracking your deals and where to start listing everything out. We'll add that in.
Yeah, so I have my in-place rents, year of occupancy, the price I'm going to pay, my closing costs, my CapEx, total cost, price per unit, NOI, cap rate. I can just start changing all these numbers. Let's say I wanted to put down 70%, not 65%. It changes my cash down. It makes all my calculations. We're going to give this for everybody that takes advantage of grantcardone.com/now. This is what I use internally to book all my deals. I'll show you what else I have in here. Like, I'm going to take my company public next year. So I have all these spreadsheets. I'm not going to give you this. This is private data, but I use these for everything. Okay. Portfolio. Here's my portfolio NOIs. When did I buy it? What was the acquisition price? Total capitalization, original invested amount, T12, T3, T9. What is all this? I'm going to give you this so you guys have the same data I have after 40 years of buying real estate, okay? Look, I'm here to help you guys. What are we at, two hours?
It's off.
Oh, 1 hour.
Yeah. Yeah.
That clock, y'all got to fix that
Yeah,
clock
if
over
they-
there.
they-
You're
yeah.
killing me. Okay. I said I'd do 90 minutes. Okay. If you guys want me to go longer, I will. I don't want to keep you here all day. I know you got families. Let me ask you, what's more important today? You getting your future right or you getting the family right today? What's the most important thing? And I'll do whatever you guys want me to do. Keep going, keep going, keep going. Yeah, dude. Hey, sometimes the family's got to suffer so the family doesn't have to suffer. Okay, you might want to throw that on X. From me to you, sometimes the family's got to suffer so that the family don't have to suffer. Okay? Now, I spent, oh man, I don't know. I got two beautiful kids, a 14-year-old and a 16-year-old, and they know that I'm willing to go suffer so that they don't have to suffer. Okay? All right, let's see, where am I at here? The profit formula, the $1 million profit formula. You see what I just did here with this profit formula on these 4 units? How many of you like that little deal in Savannah? I showed you how to buy that deal with how much money? 16 grand. I could have borrowed that from almost anybody. Okay, little deal in Savannah looks good too. Savannah's a great market as well. Okay, Fannie Mae is going to give you this loan. How do I know I can get the loan? Fannie Mae will give you this loan. You could literally live in 1 unit. You could live in 1 unit with this deal. You could take this unit. You could be like, Fannie, I'm gonna. How much was that deal? Let's say it was $340,000. You say, look, I got unit A, B, C, and D. Okay, these are being rented right now for $1,000 each. This is what you would want to do. Each one of these rents for $1,000. This is what I'm going to do, Mr. Fannie Mae, Mr. Freddie Mac, Mr. Bill Pulte. I know all these people. That's who's going to give you this loan. Unit A, Unit B, Unit C, and Unit D, okay? You're going to take the worst unit, and you're going to rent that one. And you're going to immediately say, hey, I'm going to rent for $1,250 a month, and I'm going to leave the other guys at $1,000. You're going to charge yourself rent. You're not going to live there for free. You're going to charge yourself rent. Watch. I'm going to show you how to rent from yourself and make more money because you did. You put 5% down, so you put $16,000 down on this. You finance whatever that number is, $324,000. Okay, let me just do a little math here. 324 times 0.06. So you got $19,000. I think you got $19,440 of debt here. 19,000. Let me see. 224 times 0.06. Yeah, no, I'm sorry. 13,000. Jared, let me see, Jared. 224 times 0.06. That's the interest rate, okay? So I'm going to have 13,000. I'm going to change this to 15,000, just to round up, okay? I now have $15,000 worth of debt. Who's paying for the debt? Who's paying for the debt?
The tenant.
The tenant is. Tenant, okay? So watch. $4,000 times 12. Yeah. Equals 48,000, okay? So I have a deal now. It's got $48,000 worth of income. Remember, 1,000, but you're going to charge yourself $1,250. Just hang on to that idea. 48,000. We have $13,000 worth of debt. Probably going to have about $30,000 worth of expenses. You're going to make $5,000 a year in free cash flow. Before you raise the rents, $5,000. You earning $5,000 and you put 16 grand down. That means you're earning 30% on your money. That is only 10 times what the bank will pay you, any bank. Okay, now watch. I'm going to change my rent though to $1,250. Which means the property is now going to make $250 more times 12 divided by 0.06. I'm going to pay myself I'm going to pay $250 extra in rent, and it increases the value of the property 50 grand. You're going to basically do yourself to be a winner. Don't get free rent. Free rent will cost you 100 grand. You get it? So watch. I'm going to take the worst unit and charge myself $250 more. You only have to stay there 10 months. And then you're going to leave. And then you're going to move all these guys $250. Watch what happens now. See, this guy's rent's going to come up. You can be like, hey, man, our rent's got to go to $1,250. Man, why? There's so much money. So much. What do you mean, bro? I'm paying $1,250. And I don't have a good view. Now they all go to $1,250. All you got to do is do the increased value calculator here. Okay. What's the increased value calculator? What's the math? Who knows how to do that? Let's give them this calculator, Jared. Everybody takes advantage of grantcardone.com/now. We're going to give you this calculator. The calculator goes like this: 250 times 4 times 12 divided by 0.06. Okay, do the math. 250, don't worry about what you paid, times 12 divided by 0.06. We just made, let me do it again, 250 times 4 times 12 divided by 0.06 is, oops, we just made $200,000. Because I raised my rent $250. Every time you raise the rent $250, you make 50 grand. Okay, I made $200,000. Now back to what Jared was saying earlier. Maybe your first deal, you didn't have quite the confidence to go buy a monster, but you're in the game now. Okay, if you did one of these every year for 10 years, you got $2 million made. Now, how many of you believe that this property, if it's $1,000 a month rent right now, the rents at some point in the future will be $1,250? Okay? Yeah, of course they will. They're going to go up, okay? All right? So that's called the $1 million profit formula, what we refer to as the increased value calculator. We're going to give you that. grantcardone.com/now. Okay, now I want to give you a list of things that you do not want to do when you leave here. For those of you who want to go out, you're excited, you're super jacked up right now, you're like, dude, I'm going to go looking. Here's the things you don't want to do. Okay, I want you to make a list of things not to do. Jarrell says, hey, what does this 0.06 mean? That is the cap rate in that market. And you divide by the cap rate to determine the value. Okay, but here's some things you don't want to do when you leave here. Don't go find real estate and buy bad neighborhoods. Okay, bad neighborhoods don't work. They never work because you're not going to be able to raise the rents. Okay, so number one, location. Do not compromise the location of the asset. You're better off paying more price, a higher price, and not compromising location. I'm going to give you a list of about 10 things here. Number two, use the 1% rule to guide you. What is the 1% rule? The 1% rule goes like this: the unit price divided by the rental amount. Okay, it's probably backwards. The rental amount actually divided by the unit price. Okay, in that case, the unit was $1,000 divided by 84,000 was the unit price. Is 0.011. Okay, if it hits the 1% rule, it's a buy. Okay, it goes like this, backwards. The rent divided by the unit price. Okay, so if the unit price, if the rent is 1,000 and you paid 100 grand a unit, it's the 1% rule.
Buy the neighborhood.
Now, I never hit the 1% rule, okay? The rents on that property I just bought are $4,500. Just so you guys understand, the 1% rule, just because it doesn't hit it, doesn't mean you wouldn't buy it. If the location gets even better, you're going to violate the 1% rule, okay? So $4,500 is what the rent is, and I paid 600 grand a door. So that's the 0.0075. It's 3/4 of 1%. It's getting close, but the asset was so good, I know the rents are going to go up, and I know there's a reason why the rents are so low there. So these are unbreakable. You don't want to break them, but you want to take the list and combine them. This isn't about, I don't want you guys to walk in here, except for number one, never violate number one. But you're going to put the combination of these together and probably have some kind of like, you got to work with this as a puzzle, okay? Number three, units allow you to scale. So what does that mean? You remember the deal I just did in Savannah? Guys, I could show you. How many deals do I have in here that we
I mean, just in Florida, There's,
Yeah,
I mean, there's thousands of deals.
Yeah, because somebody said earlier, man, that was the good old days when you could buy real estate. Let me show you how many apartments are available.
Go to sales.
Sales.
Yeah, you can just zoom out. There you go.
Okay, this is that multifamily? No, let me go multifamily only, Jared. Let's see. This is the United States of America. Okay, they're coming. Okay, the blue ones. Let me see.
880,000 properties.
880,000 properties. This is all multifamily real estate. This is trillions of dollars. Trillions of dollars of real estate. Here's some deals right here. Here's 117 units in Los Angeles, California, ladies and gentlemen, divided by 117 units. These are 21 grand a unit. The good old days are gone. No, they ain't. You ain't looking. You're not seeing blue because you're not looking for blue. You're looking for yellow. You look for yellow, you see yellow, and you miss everything else. Okay, you're looking for a single family home, and you're not looking for where the deals are. Here's a deal right here, 47 units, and the bid starts at $4 million. Why aren't you seeing this? Because you're not in this food chain. Okay, here's a deal in Paramount, California. If you know where that is, this is 300 grand a unit. Okay, you're like, man, is that a good deal? I don't know. What are the rents? That's what matters. Not only does it what the rents are, hey, what can I do with the rents? Because if you can buy, let's see this deal, Jared. Man, I'm kind of interested now. This always happens to.
This is a platform called CoStar.
Yeah.
This platform, if you want a single market, it's probably cost you $1,000 a month to get the whole country. I think we pay 75, 80 grand a year to have access to this technology.
Yeah. Let's see here.
Because this is how you find deals. Like a lot of people are going, how do I find these deals? How do I find these deals? Like, it costs money to do this stuff, guys. Like, it costs money to get access to the best tools. Now, there's free tools that you can use like LoopNet, but LoopNet is typically the big brokers, the highbrow brokers. They're not taking the deals on LoopNet. So LoopNet's free if it's easy to access. There's going to be a lot more competition, and there could be problems in the deal. More often than not, there's always problems on the deal when it's LoopNet. The buyer wants too much money. The realtor the broker for the deal is a family member or a friend.
See, like this deal right here on Paramount. Okay, there's probably $1.8 million to be made on that deal. One deal, $1.8 million. How do you know that? Because the rents on that deal should be about $3,000 a month. Those rents should be $3 grand. It should be a $4.8 million deal. They're probably distressed. A loan's probably due. They're going to have to sell the asset. Why would they do that? Because banks don't keep real estate. Banks are bankers. They're not real estate managers. So, Jared, I don't know if you can put that in our deal finder. This is 300 grand a unit. You can't build anything in the state of California for 300 grand a unit. You probably can't build in California, period. Because they don't want anybody building anything, okay? So what I'm gonna try to do is get you guys in a situation. For those of you called in, we got some people saying they can't get the call in, okay? GrantCardone.com/now. We offered a free call when you grab the offer today at $297. I'm gonna give you the millionaire booklet, the multifamily booklet, how to create wealth investing in real estate, the dictionary. I'm gonna set you up with this book that we're going to go over with in 11 days on a Saturday and Sunday. I'm going to give you the how to create wealth investing in real estate, the notebook, the cash flow. We're going to give you a whole bunch of tools to work with. Also, the increased value calculator and a list of things that will allow you to position yourself with the marketplace to start talking to your brokers. Like, can the deal support the debt? Okay, I just did the math on this deal. You got to know the math, okay? Number 5, you want to look for barriers to entry. You're like, you hate California. I know, I do. I would love to buy a bunch of real estate in the state of California, okay? I would love to. Why? They have the largest barriers to entry of any market in the country. In fact, the top 20 best real estate markets in this country all have one thing in common. What do you think it is? What do you think the top 20 most expensive real estate markets in the country all have in common? Yes, Joseph Levine. They're Democratic cities. Okay, they're crowded. They have tremendous barriers to entry. They have rent control. They have moratoriums on rent evictions. They have all these regulations and problems. But let me just tell you guys that are all worried about rent control. With every time they put rent control on a marketplace, the rents go up. In fact, I bought real estate right here in, can you pull up, let me see, what's the name of that deal? It's in my sheets, let's see. I bought it with those people out of California, Wellington Club. The Wellington Club apartments. Wellington Club, There it is. See these? No, that's not mine.
No,
Wellington Club
Kansas.
Apartments, Wellington.
Florida. Yeah, there
Florida.
you go.
Okay. Let's see here. See this? Okay, I bought this piece of real estate in. I bought this
2014 or 15?
I bought it May 2014. It's 12 years old. Is that right?
Yeah.
Yeah, 12 years old. I paid $31 million for it. We put $10 million down. I didn't have all the money. That asset is worth
53.8 fair market value right there.
$54 million today. We paid 31. We've made $20 million on that asset. Okay, I don't have any money in that asset anymore. We already gave all the investors their money back. Everybody has all their. Look at this thing, beautiful, dude. Now, why am I telling you about this deal? This deal popped up. Guy calls me and says, "Hey, I got this deal. Can you meet the seller there?" I said, "Yeah." Boom, I got in my Range Rover, drove over there as fast as I could, met with him, walked one unit, and knew immediately I would buy it. I said, "Okay, I'll buy the deal." And they're like, I'll give you $31 million. I knew immediately that fast. And you see, this is the number 5 thing you need in real estate, confidence. 4th thing you need is network. 3rd thing you need is cash. 2nd thing you need is debt. The 1st thing you need is a deal. As soon as I saw the deal, I knew I would buy the asset. The things in between, I could fill in. The debt, the cash, how am I going to raise the rents? I knew it was a steal, okay? And so if you go back to this deal I was showing you, I was showing him a deal.
Petrol, yeah. It was in CoStar.
Yeah, in CoStar. I forgot exactly what I was. Let me see here. Where'd it go? Where did it go? Not the Plaza.
Oh, you might have.
Did I bounce?
You closed it out.
Yeah. Okay, Jared's going to help me. Okay, because I'm showing you a deal that I know you can make money on. That deal that I was showing you, there's $3 million. When there's barriers to entry, the reason I was talking to you about the Wellington deal is the Wellington deal had rent restrictions on it. It had what's called a rental covenant. Nobody would buy it because of the rent restrictions.
It is.
And the guy that mentored me at this time, his name's Robert Gibbons. Robert's done $80 billion of real estate in his career, and he was mentoring. He's mentored me now since this deal. And he's like, Grant, the rental restrictions, this is what I'm telling you about the Democratic cities. This is a Democratic market right here, by the way. Wellington is. Outside of Palm Beach has never elected a Republican, okay? They are Democratic by nature. They hate Trump. So this thing had rental restrictions on it. Because it has rental restrictions, they don't build as many units in that market. But when you read the rental restrictions or covenants, called a covenant, the covenant said, I cannot raise the rents more than X. I forget what the number was. Guess what? The number that they were rent restriction to were higher in 14 than they still are today. I still can't get to those rents. So just because it says a restriction, also in Los Angeles, California, look up what it is. I think it's anything built after 2005. I'm sorry, before 2005 has a rent restriction. Anything newer than that has no restrictions. The problem in California right now is collecting rent. But if you're in a great location, you're always going to collect the rent because the people that live there don't want to leave there. All right, I think it's 2005. Just look up when is there?
It the year of
what
the
year?
build?
Yeah, it's okay. Number 6 thing, buy below replacement costs. Okay? When I look at an asset, I don't look at the price. I look at the replacement cost. Remember, I'm giving you a list of 10 things. What does it say?
In California, rental restrictions based on year of build are primarily related to rent control exemptions, not prohibited rentals. Building constructed within the last 15 years are generally exempt from the statewide
there you go,
rent
2000.
cap.
So 2000, no, 2010. Anything before 2010 wouldn't have it. 1966 would have a rent restriction. Anything after that, newer stuff, anything built in the last 2 or 3 or 4 years, would have no rent restrictions. So you can go as high as you can go. Also, let me just say this. Many times, for instance, the state of California, they had a 5 and 5 program. You just got to know your market. Colorado had a 5 and 5 program. New York, Illinois, Minnesota had a 5 and 5. The 5 and 5 was this: 5% over the inflation rate. Inflation during 2021, during COVID, was 5 and 6. You could raise the rents, the inflation rate, plus 5 points. So you could take your rents in 1 year, 11%. Some of the rent restrictions, I always tell my wife, once you write it down, it can actually be used against you. So sometimes when you come up with these rules, they screw you up. Number 6, don't violate this rule. You want to be below replacement costs. Meaning what? If I could buy an asset for $600,000 a unit, but it costs $1 million a unit to build it, you're $400,000 below replacement cost. Number 7, underwrite to a worst case scenario. So we underwrite all worst cases, okay? If I go into a deal and the rents are $4,500, or the rents are $2,000, or the rents are $1,000, okay? I'm gonna underwrite to these numbers for the next 24 or 25, 26, 27, boom. I know I'll get a bump somewhere, but I don't need it to happen right now, okay? So I'm gonna show my investors, here's worst case, here's medium case, here's best case. But let's go back to best case, worst case. Worst case is our rents don't move, okay? You didn't lose any money. Okay, your down payment is still protected. Watch. Let's say we bought something for $1 million and we put $250,000 down on somebody else's money. Okay, he's got $250,000 at risk, but he's protected by $1 million. So that asset has to go from $1 million to $750 to $500 to $300 to $250 before he's at risk. You understand? That's called leverage, and it protects against an underwriting a worst case scenario. Number 8, if it don't cash flow, just move on, okay? There needs to be positive cash flow to pay your investors and give you protection. Number 9, and let's open it up to some questions, Jared, okay? Number 9, price is the least important of all the metrics. We have, 5,000 people in a mentoring program, okay? Probably 5,000, okay? The biggest thing that people come to us with is they compromise location to get a lower price. A skank is a skank, okay? Like if it's a bad piece of real estate, it's a bad piece of real estate. There's no price worth buying a bad piece of real estate. It's always gonna be bad because of the location, okay? That's what we call in real estate, the skank, okay? Number 10, know your exits. How you going to get out? What's the cash flow? What's the increase? Okay, what's the story? What's the refinance? What's our exits? How do we get out? Okay, also number 10, know your buyer. Who's going to buy it? You should know when you buy who's going to be your next buyer, okay? Number 11, rent it, never sell it. One of the biggest mistakes I've made in real estate was replacing real estate, okay?
Yeah.
Yeah, this says refi and never sell.
Yeah, you said rent.
Yeah, refi and never sell. Remember this deal right here, this deal we bought for $1 million that I just gave you an example on? Let's say I did this. This will work every 7 years, by the way. I bought it for $1 million. I put $50,000 down. I know I have too many. I got too many 50,000. Okay. I financed $950,000, and we wait until 2035. Okay, we put a 10-year loan on it. We paid $1 million, not $1 billion. Okay, we paid $1 million. We put 50 grand down. Okay, we paid for it. Everything worked. I lived in it for 10 months. Moved out. That's the Fannie Mae requirement. I had to move in. I moved in. Oh, I got a phone call. My uncle said, I want to live there. I got a nephew. My nephew can live there. Good. Nephew can use my lease. I'm allowed to do that, by the way. I'm going to live in it. Nephew said he wants to rent from me for $12.50 a month. So my nephew rents from me and I go buy another one. Okay? And I wait for these rents to go from $12.50, and let's say by the end of 10 years, they're $1,600 a month. Okay? They went up $350 a month. 350 times 4 times 12 divided by 0.06. Okay? Property is now worth $1,280,000.
If you guys have questions, just down on the bottom of the Zoom for VIP, you'll see a react button. If you hit that button and hit the hand, it'll raise your hand up, and that's how we'll know who has questions. But
Okay.
you got to have your camera on.
Okay, remember I bought it for $1 million. I put 50 grand down. Who's paying this note right here of $950 a month? By the way, it's a schedule of assets now. I have a schedule. I have one. I have $1 million asset now on my net worth statement. I owe $950. I have credit. I have credit on being built, assets that are being paid for by other people that live at the property. I only have 4 units here. It's not a big deal, okay? And I raised, the rents went up. They didn't go up 26, 27, 28, but they still cash flowed. And then it started going up a little bit, not even a lot. How many of you think the rents on this that were $1,250 today in 10 years will be higher than $1,600? Dude, I'm being so super conservative here. It's crazy. These rents could be $2,200 is more likely. But let me just do a conservative worst case scenario for my investor friend, okay? Hey, the rents go up $350. That's not much. They'll be $1,600 in 2035. That's not much. I know it's not, but just let's say that's all it does. We now have a property worth $1,280,000, and what do we owe? We owe $950. So what am I going to do? I'm going to pay this loan off. Okay, I'm going to pay the loan off. I'm going to get a new loan. I'm going to pay this loan off. I'm going to go to the bank and I'm going to be like, how much can you lend me on $1,280,000? And they're going to be like, we'll loan you, what do you think, Jared?
Well, he's gonna take, it's gonna take.
Let's say they give me $1 million. Let's just take worst case scenario. They give me $1 million. I give my investor friend 50 grand back. And I own 100% of this asset, and I don't have any money in it. Okay, what's it worth? It's worth $1,280,000. What did I make? $280,000. Now that is if the rents only go up $250 over the next 10 years. But how many of you think the rents could go up $1,000 to $2,250? The average rent in my portfolio right now is almost $2,000. Let's say the rents go up $1,000 times 4 units. Okay, let's just do the increase. Or let's do the whole thing, $2,250. We'll do the $2,250. This is the whole value. This is called an underwriting calculator. In fact, we have a calculator. I'm going to give you this app. It's my underwriting calculator that will allow you to underwrite any deal as fast as I underwrite it without ever understanding the math the way I understand the math. Okay, so for everybody that took advantage of this already, I always love doing this. For everybody that took advantage of an offer I haven't even explained to you. You just trusted you and me enough to go to grantcardone.com and put your credit card in there and buy this thing for $297 without even knowing what you're getting. I'm going to give you a call. I'm going to give you the book. I'm going to give you the cash flow hat. I'm going to give you the millionaire booklet, the dictionary. I'm going to give you 2 days with me online live. And I'm going to give you a phone call into our office as well as the increased value calculator. And I'm going to give you the underwriter calculator. Okay, I'm going to give you both of those for free. Yeah, dude, that's a lot of napkins right there.
Sounded like you need more than one.
Yeah. Okay, check it out. Now watch this. $2,250 times 4 times 12 divided by 0.06. The property's worth $1.8 million now. Okay, what did I pay for it? $1 million? No, I didn't. I paid $50,000. No, I didn't. I actually borrowed $50,000 from my uncle. I didn't pay anything for it. I got an asset worth $1.8 million. I go get a loan for $1 million. I have $800,000 of net worth on my financial statement now that I didn't have. But I'm not going to do this once. Nobody's going to do this once. You're a dunce if you do it once. Why wouldn't you do it every time you could do it? How many times can I do this, Jared?
As many times as would you like to.
Dude, how many times? Dude, you want to do it 1 time, 2 times? I've done it 47 times. I have 47 loans with Fannie Mae and Freddie Mac. 47 different loans, $2 billion. If you would have told me when I was 30 years old somebody's going to give me $2 billion, I'd be like, Brock, I can't even get a loan on a truck. What are you talking about? Okay? But when you learn this game the way I learned it, okay, I spent millions and millions of dollars, tens of thousands of hours learning from mentors. Sam Zell, $5 billion guy. Robert Gibbon. Robert Gibbon has sold $80 billion of real estate. I'll bet you I've spent 300 or 400 hours with Robert. I've interviewed Robert on stage. Hey, what would you do? What do you think about this market? What do you think about the debt market? Like this guy right here, legend. You want to go online, learn everything you can from him. He's not going to tell you where to look, where to go, how to talk. He's not going to tell you how to talk to the brokers because this was a game he didn't have to play. Okay, he didn't have a social media game. He played this game. He created the REIT structure. Okay, and he went to big banks and borrowed money. He didn't go to regular people. I'm going to show you how to pitch. I am the master. If Sam Zell was here today, he would have me mentor him how to crowdfund directly from the public. He didn't have to do that. He went straight to banks. I am the #1 crowdfunder in the world. In the world, no one, there's not anybody even close to what we've raised by going directly to uncles, brothers, and on Facebook and Instagram and TikTok. I'll show you exactly how to raise money to buy whatever number of deals. Now, first you got to know, where do I look? Where do I find deals? It goes like this. This is the order. Okay, if anybody knows the order, there's an exact order. First, you go find the deal. You want to write this down. The deal. The deal is the asset. This is the asset. The target, okay? It's the potential target. Like I'm looking at this target right now. We have a target. This is called Harbor. No, it's not called Harbor. Where's my phone at?
Right here.
See, like I even have it on my phone right now. See my phone on my phone? See? I got this target. So I find a target, I put it on my phone, I look at it every day. That's all I think about. And then I just start working I don't own the deal. Somebody else owns it. They built it. The deal that I bought, this deal that I showed you earlier that we just bought in July, I've been shopping that deal for 2 years, working it. That's why you need an Excel spreadsheet. Let's make sure we get everybody that spreadsheet, okay? You want that spreadsheet to start adding deals to. And if you miss the deal, you just put it in lost deals. Like I have a bunch of lost deals down here. Let me go to my lost deals. Yeah, here's lost deals. Look how many deals I've lost. Look at this. Why do I put them as lost deals? They're lost for now. Yeah, my wife didn't go out with me the first time she saw me. She didn't go out with me for almost 2 years. And, so what? Doesn't matter. Okay, this is stuff that's on the market right now. Let me go to the on the market stuff. These are all on the market right now. This is how many deals I'm working at a time. Okay, now, you're not going to start here. You're going to get here, though. This is what Sam Zell said. Grant, don't worry about where I'm at right now. Worry about where you're going to end up here. Same thing Robert Gibbons said. You can't do this now, but you need to be looking here. That first deal I did with Robert Gibbons, it was $63 million. Okay? I didn't have the money. Listen to me, folks. You do not need the money to do the deal. You need to see the deal. Okay? This is the order. Robert Gibbons told me, he's like, you don't need the money yet. Now, he wouldn't tell me this until later. I'm telling you right now, find the best deal. This is 80% of the game, maybe 90. The other things, the other 4 things are the other 20%. Next thing is the debt. Now, the debt is going to be 75% of the financing is going to take place right here. 75% of that 80% is funded by Fannie Mae, Freddie Mac, CMBS loans. You just got to know who the lenders are. Between you and the lender, though, there's a broker. Okay? That broker is going to come from number 4, which is your network. Don't go there yet. Now I need some cash. Okay? Infinite numbers, infinite amounts of money on planet Earth. Like if I can do one thing for everybody that's watching this today. How are we on the numbers, Jared? If I can do one thing for everybody watching today, folks, there is not a shortage of money on this planet. Trust me. There's more money than there are deals. Do you understand? There's enough money to buy every deal on planet Earth. There's 390 to 400 trillion dollars of real estate on planet Earth. 400 trillion. Okay, how much money is there? Who knows, dude? Nobody knows how much money there is. Nobody knows how much Russian money, South American money, Vietnamese money, like whatever, bro, whatever money. There's so much money, pesos and American dollars, and how much gold is there? Nobody knows how much gold there is. By the way, there's not just gold. There's gold paper, gold puts, gold calls, gold options. There's gold companies. Like there's endless amounts of paper on planet Earth, just endless amounts. But it has no place to go until somebody finds a deal. Once you find a deal, then the money finds where to go, okay? Number 4, we need what, Jared? We need a network.
Yep.
Now, this is where a lot of you guys suffer. Jared, what can we do to create a network for the next 2 weeks until we have the event?
So what
Because what's going to happen is you guys are going to be excited today, and tomorrow you're going to be watching football.
Yeah.
And that's your network tomorrow. Tomorrow you're going to be watching Tampa Bay. You're going to watch the Jets get creamed again. Or you're going to watch the Saints lose again, okay? And then you're in that network, okay?
I know what we can do.
But what I want to do is I want to hold you together between now and, what's the date?
December 5th and 6th.
5th and
Saturday
6th.
and
Just
Sunday.
to December 5th and 6th, I want to hold you together.
6 and 7.
6 and 7.
Yeah.
December 6th and December 7th. I'm going to do 2 days with you guys. And it won't be like this. It's not going to be like, okay, it's going to be, let's slow it down, one step at a time. Where do I find a deal? Okay, who do I talk to about that? What do I say to them? How do I talk to them? How do I make the phone call? Okay, we're going to slow it down on the 6th and 7th.
Yep.
And between now and then, join us.
We can give them access to our mentoring program.
Yeah.
So they can get connected with all the other investors in there and just see kind of what that's all about. And then we do 2 calls.
We're going to give you a network.
Yeah, so on Fridays at 3 p.m., we do a live Q&A call. So for the next 2 weeks until the event, you'll get access to basically that community and then also those calls so you can come in and ask more questions, which we're going to take some questions in a minute here.
Yeah. So the network is going to be people around you, like in Savannah. Miami is not my Savannah network. Okay, so when I am in Miami or Fort Lauderdale and I'm shopping real estate, great, I have my network. But when I go to Savannah or I go to San Diego or I go to Chicago, the network changes. The first people in my network are not the brokers and the insurance people in that market, not the real estate brokers, not the debt guy. Dude, my network always is my real estate network. So if I go to Columbus, Ohio, I'm gonna go online and say, who do I know in Columbus that knows Columbus, Ohio? The schools, the crime problems, the development issues, the traffic, where to go. Hey, how about this? Do y'all know this little trick? The clock. Okay, 12 o'clock, 3 o'clock, 6 o'clock, 9 o'clock. I go to my buddies. They might not even buy real estate. In fact, that would be even better. I'm like, bro, you in Columbus, where should I be on the clock? You should be between 11 and 1. Leave everything else in this town alone, okay? Downtown, yeah, they're trying to sell it. Leave it alone, bro. It's going to fail, okay? 11 to 1. Dallas, Texas, 11 to 1. This is what they tell you. Anywhere in this quarter, you're going to get rich on. When you start moving around, Denver, Colorado, it's got a clock, okay? Like every market's got a clock. This is Miami down here. There's nothing over here, dude. I mean, this is swamp. Okay, so there's no real estate over here in the swamp. You can't buy anything here. This is all 3 o'clock all the way up and down. There's no apartments here. You fly into Miami, you're going to be like, oh my God, there's real estate everywhere. That's not real estate for you to buy. Okay, you go to Houston, Texas. Houston, Texas got a different clock, right? This is the Galleria right here in Houston, Texas, right in the middle. You down here in Hobby, don't even go there, bruh. Don't go there with your money, other people's money, nobody's money. Never, ever go there. Don't touch it, right? The thing about Houston, though, is they just build more clocks, okay? Every 10 years, they come up with, well, they probably won't do one over here because this is over to Beaumont, but they'll just come up with another clock and they'll move the center of town to another suburb because they have no zoning there. Every city's got its quirks. And it's got what Jared was talking about. It's got its rhythms and cycles, okay? And you got to know where you're at in a cycle. And where does that come from? It comes from your network. Now, the last thing you guys need is the thing I can't give you in one day. And this is what I have. Most valuable thing I have in my life. Two things I have. They both start with a C, okay? Three things probably. Number one, I have confidence, tremendous confidence. The confidence came from 40 years of doing this. I've been doing this 40 years, dude. If you took me back to 4 months when I was doing this, I didn't know shit. I was terrified. Had no clue I would do any of this. That's why I said to everybody when we started today, I knew nothing. I only knew one thing. I had confidence in real estate. I didn't have confidence in the debt, the conversation, the story, the walk. I didn't know any of this stuff, but I had confidence in the real estate would last longer than me and my family. It would last longer than me and my career, okay? Well, I mean, I own real estate today that's gonna outlive me. So I had that confidence. Now I needed to build my intelligence confidence. Number two thing I had was courage, okay? I have a lot of courage. I ask questions. Courage doesn't mean I'm gonna go punch somebody in the face. It means I'm gonna ask dumb questions. Hey man, how does this work? Okay, why do I need to pay that fee? Why is there an application fee for this? Why is the price this price? Why is the interest rate that interest rate? Like, I ask so many questions. Now, you guys, typically you're asking questions to the wrong people. You know, you guys should not be asking questions to people that don't have what you want. Ask questions of people that have what you want. If you want to buy a private jet, do not ask people that don't have a private jet questions about a private jet. Okay? The broker, in many cases, does not have the private jet. So I can go to Robert Given and talk to Robert about real estate, but he's selling it. I'm getting data from him as a seller. Sam Zell had bought hundreds of billions. Robert sold 80 billion, okay? I'm gonna get completely different data from both these guys, okay? You get data from a millionaire, it's one way. You get information from a billionaire, you get a completely different level of data. You get information from a guy worth 100 billion, completely different information. So be careful where you're getting these questions for. Third thing you need is the ethics, okay? These things I have and the courage. And some of this has got to be manufactured, okay? Like, I don't buy bad deals, period. I will not buy, I don't care whose money's invested, I will not buy a piece of real estate that I believe, and it's probably cost me money doing this, but if I think that there's any problems with this deal, I'm going to be like, no, I'll just wait and find another deal. So, confidence, courage, ethics. Okay, I also know this. Part of that ethics thing is this. Folks, you're going to die. Okay, you understand? You have a life cycle. You're going to leave your family. You're going to leave your family with nothing. Me buying a house does not prepare my kids or my church, my charities, my future. Okay, I don't want a house when I die. I want real estate that provides my wife and my kids with assurances. That's ethics for me. So I might have to sacrifice what I have today to buy something tomorrow. When we moved to this town, to Miami, I didn't own a home. I rented a house. Okay, so what? I rent a house. Big deal. I rent. I had my money in a rental that I paid rent every month, $2,500 a month in rent. Okay, and I took all my other money and made this one investment. Okay, real quick, I want to invite you to join us. How to find $1 million in one deal. And by the way, if it was 32 units, you're there. 32 units, $200 a month, bang, you'll kill it. 16 units, $400 a month, you make over $1.6 million for you and your investors. I want to invite you to come spend 2 days learning how to find the deals, where to find the deals, the types of real estate to invest in, how to get the financing, how to find investors for your deal, what to offer the investors, how to find off-market deals, and a lot more. I'm going to offer everybody a strategy call today, okay? I offered that as a bonus for the first 100. Will some of these calls have to take place tomorrow?
Yeah.
Okay. If I can't get the call today, I'll get it done tomorrow with you because we'll back up on these phones here in a second. The offer is at grantcardone.com/now. Also, we're going to do 2 calls with you before the event, the 2-day event. You're going to join our mentoring call on Friday. I have 2 of these at 3 p.m. Eastern Standard Time. This is Q&A the entire time. It is absolutely phenomenal, and we'll record these for you if you can't make them. Also, I'm going to give you our dictionary, Grant Cardone's Multifamily Real Estate Dictionary for free. I'm going to give you our How to Create Wealth Investing in Real Estate. I'm going to include this book for free. I'll ship it out to you. I'm going to include the 10X notebook so you can take. We're
going to send you out this whole box. It's called the 10X Toolkit.
10X Toolbox. Okay. Also, I'm going to include this 200-page manual. Digital manual so that you can follow me when we teach this material on the 6 and 7.
Yeah.
Okay. This is a ridiculous deal, folks. The whole thing, $297, and I'm going to include the increased value calculator. I'm going to include the underwriting calculator, and if all that wasn't enough, folks, check this out. Okay, are you ready for this? I'm going to give you a credit at my store for 100% of what you paid. Okay. Take that back. Take that back. Check it out. I'm going to give you back what you paid me as a credit in my store to use against any product or service that you want to use in the future.
And the other thing,
hang on. So you're going to put $297 on your card. That's a tax write-off. And then I'm going to give you a credit at my store, and that is not a tax event. Okay.
And one more thing that we're going to do, guys, because I know that this is a lot. I know there's a lot of information here.
Well, it's actually not a lot. All you got to do is go to grantcardone.com/now, grantcardone.com/now, and say, this is stupid. Thank you for the offer. Christmas came early. You're stupid if you don't do it. No offense. You're going to do it right now. That's why we call it grantcardone.com/now.
And what we're going to do for you is
to make it even more stupid.
We're going to give you a 100% money back guarantee. So if you show up to the 2-day event and you don't think it was worth it, just call the office. We'll give you your money back. As long as you don't use the $297 credit, we're going to give you 100% of your money back, no questions asked. So there's no risk in you guys for this. You want to come learn, you want to come spend 2 days with Grant. The guys, this is the only real estate billionaire teaching people how to invest in real estate. Nobody that owns as much real estate as this guy is teaching people how to do this. Like, you have access to somebody who's done this 50 times. I've been with him for 15 years. He's never lost money on a single deal. We have 18,000 investors in Cardone Capital who have given him $1.8 billion to have him invest, to be able to co-invest with him in his deals. These people are also learning from him how to invest on their own. They're coming to our workshops. They're coming to our real estate events. They're in our mentoring programs. We have an investing club. Like, we have all these things that we do to serve the real estate community. This right here is a place where you can come and spend 2 days learning from this guy. We're going to spend 10 hours going deeper on all this stuff, slowing it all down, asking and answering a lot more questions for you, and you get 100% money back guarantee. So there's no risk for you in this.
And I'm going to give you the deal tracking. I'm going to give you the instant underwriter calculator. That's how you underwrite a deal, so that when you're calling a broker, you don't like, oh, how much you want for it, Mr. Robert? You don't need to sound stupid anymore. I don't ask people what they're selling their asset for. I know what they're going to sell the asset for. All I need to know is how many units they have and what the rent is. And then what I most importantly want to know that nobody does is, what do I need to do to that asset so that I make $1 million? Okay, that's what we're going to go into detail, okay? What am I looking for? What deals am I putting on my sheet? You're like, well, there's no deals in my market. Okay, just so you guys understand, if you don't have $70,000 to spend on the technology, I do. I already have the damn technology, okay? So when I go and I start showing you guys deals, okay, where are these deals? Let me just go here. I'm gonna go to sales. I'm gonna go, give me a market. And then let's open it up to some questions here. Look, this is just Florida right here. All these little blue things, you don't have enough money.
You're like in South Florida. If you zoom out a little bit.
I mean,
Okay, there you go. There you go.
That's just
6,400.
I can't buy all this.
That's just South Florida right there.
Yeah. So how stupid can you go?
As stupid as you cash
As
flow.
stupid as your cash flow. Now I'm going to go to multifamily right here. Let me see. Sold. That's sold. Oh, no, this is all sold. I want for sale. Sorry. Okay, for sale. Oh, yeah. Hallandale's about to be a bloodbath. Hallandale, Hollywood, Aventura. We're going to have a bloodbath right here.
Also, a lot of people asking if they can get on the phone with somebody. So if you go to grantcardone.com/now, you can take advantage of the offer. Again, 100% money back guarantee plus the credit. Second thing is, if you want to talk to somebody on the phone.
You're talking too fast, man.
310-777-0255. 310-777-0255. If you call the office, you'll get a hold of our team, and we can answer any questions you guys have.
2 blocks from Miami Beach. Cash flow positive. Starting bid's $4 million. You're like, I don't have $4 million. Good. You don't need $4 million. You need the deal. Somebody else will fund the $4 million. Now, if you're in Michigan, you don't need to come try to buy this deal in Miami because you're not going to get it. And nobody's going to give you money to manage a deal from Michigan to Miami. So don't be stupid. Okay, that's the other thing we want to make sure you don't try to make dumb moves where you're like, bro, you're not going to get this deal down here if you're over there. Okay, stay in your market. So if I wanted to go down here to location, let's go Troy, Michigan. Is there a new Troy, Michigan? Yes, there is. Okay, let's see. There's nothing in Troy, so I might have to open this up. Let's go the state of Michigan and see what's for sale over there. Okay, multifamily. What am I looking for, Jared? Here. This is just a random thing. Somebody put Michigan in there. In 22 hours, somebody's going to auction off 32 units. Isn't that fucking funny? 30.
Starting bid $200K.
I'd be like, I'll pay. I mean, I don't even know what it is.
Starting bid is $6,200 a unit in Detroit.
So if the rents are, let's say it's a Section 8, the government, I'll collect a check from the government. $850 a month times 32 units times 12. It's going to produce 32 times, what did I say, 850 times 12. It's going to produce $326,000 worth of income. The check comes from the government. Okay. Now, times 0.7. My NOI on the deal is 228. I don't even need to talk to a broker, dude. I know my math. How many of you'd like to have that data confidence immediately to go to a market and say, okay, divided by 0.08, I could pay up to $2.8 million and steal this. 2.8 million divided by 32 units. I could pay $89,000 a unit and steal the real estate. So you guys that are here and you're like, bro, can you transfer? How many of you'd like me to transfer my brain, my 40 years, and upload it into your brain? Okay? Where?
Right now.
Yeah. Okay? Okay, watch this. Palmer Park apartment complex, okay? Jackson, Michigan. Here's the deal, 229 units. I don't want to go that big. Let's go smaller, Jared. You want to go smaller or bigger? Or you want to
smaller. Let's go smaller. A lot of people, I think a lot of people, the big deals are just hard for people to think with.
Yeah. You guys want to go smaller, big? Bigger, or smaller? Or you guys want to upload my brain, okay? How many of you like to upload? How many of you would pay $297 for my brain? My real estate brain. How many would pay $297 to rent my brain for 2 weeks? That's what you're doing, dude. That's what you're doing. That's why I was willing to spend millions, tens of millions of dollars with mentors. Because I'm gonna spend 10 million to get $1 billion. And guess what? That's how it turned out for me. We have $5 billion worth of real estate. Okay, I started with nothing. You understand? My mom tried to talk me out of doing this. That's how much. Not only did I have what's worse than advice? Bad advice. We have $5.2 billion worth of real estate today with $2 billion worth of debt. There's $3.2 billion worth of assets under management. We've raised $1 billion from investors to buy these assets. Okay, guess how much money I started with? None. Okay, so you guys are like, oh, guess how good my credit was? My credit score was like a 620. Is that good or bad, Jared?
It's below average.
Okay, I was a car salesman. Guess what? Banks don't like car salesmen. What do they like less than that? Maybe multi-level marketing. Okay, because they're not dependable. They're like, I know you're going to quit. You're going to have a lot of turnover. Let's go to another market here, Jared. Let's go to Texas.
You want to do some questions too?
I do. Just bring them in, dude.
All right, let's go to Jacob. Jacob Fontenot, I think. Jacob. Let's bring him up. Jacob, what's going on, dude? Go ahead and unmute. Love to hear your question.
There's Dallas, Fort Worth right there, by the way.
How you doing?
Good, buddy. How you doing?
I'm Jake. I'm from Toronto, Louisiana. I just got a quick question, short and simple. All right, say you ain't got no funding, no parents. Both my parents died when I was young. What do you recommend for funding? I want to get into Section 8 real estate. I'm already an entrepreneur. I own a long-term landscape business. I've been doing that for probably like 9 months. So what do you recommend?
Where do you live?
I live in Denham Springs.
Yeah, so good market for you. And what you should do is you should not go look at Section 8. You should look at number of units. You should find number of units, and you should start building a network of people to invest with you. How old are you?
21.
Dude, you need to be the hustler I can't be anymore. You need to hustle the product.
You are
okay?
set.
I had a buddy of mine. He made $11 million. $11 million working with me managing the real estate. He's like, bro, I don't have any money. He had $53 and he was 53 years old. He's like, Grant, I don't have the money. I had the money, but I didn't have the time. I had the money and I had the interest. He was the sweat equity. You need to be the sweat equity. And you're going to go to a handful of guys in Denham and you're going to be like, guys, I'm finding it, you fund it. I find it, I manage it, I do all the bullshit, I do the evictions, and you're gonna do all the studying. And you're gonna be like, why should I trust you? Because I'm the freaking guy. First of all, I want it. 2, I'm young. 3, I got the time. Okay, he's a car dealer. Your investor's a car dealer, a doctor, a dentist, a chiropractor. They don't have the time, bro. They don't want to go do this bullshit.
And they all hate their job and they want to get out of it as soon as they can.
And the brain surgeon knows that how can a brain surgeon go buy real estate, bro? He's doing brain surgeries.
Let's say I have 30K liquid because the grad season just ended. I'm entering winter, and I don't want to risk my capital. And I'm hearing what you're saying. I'm liking it, but what can I do with that? What you like?
I mean, you can buy with 30 grand. With 30 grand, you can buy 30 divided by 0.05.
$600,000.
You can buy $600,000 asset.
With a credit score under 600?
Yeah.
The guys, can I tell you something? The banks do not lend on multifamily assets based on your credit score. They lend on the asset. When a bank is issuing a loan for a multifamily asset, they are essentially investing in the business of real estate. So that asset, all they want to do is know that Jacob has a little bit of skin in the game, enough to where if you blow the deal, they're gonna get that asset back, and it's gonna be at enough of a discount that they know they're gonna be able to offload it to somebody else and get their money back. So your credit score, they are looking at the asset. When Grant goes and buys assets today, they do not look at his credit score. Your credit score does not matter. What matters is, do you have a good asset, and do they have the confidence in you that you can manage it? And that's why you got to go in there with your plan. Say, this is the asset, this is how much debt I need, this is where I'm getting the equity from, this is the business plan for the property. We plan on, I'm going to use my landscaping ability to go in and take care of the property. I also do handyman work, so I'm going to be the handyman on the property, making sure that everything's fixed. I'm going to do that at cost rates, and we're going to get this thing from $800 a month rents to $1,200 a month rents over the next 18 months, and I'm going to come back to you and I'm going to ask you for a refinance loan. You guys are going to get all your capital back out of the deal.
And You think I can afford to do that with the bank?
here's
That's my personal bank?
yeah. Don't worry about your bank. Your bank's not going to help you. You need a Fannie Mae and a Freddie Mac. They're federal lenders. They do $12 trillion of assets a year. You're just going to the wrong places. This is for most of you guys in the room. You're like, I don't know what bank to go to. Guess what? You're going to the wrong place. You go. I'm going to show you where to go where they're going to say yes to you, right? You don't go to a pig farm to buy alligator.
Yeah.
Like you're going to the wrong place to get things. Like you just don't know. Nobody taught you, bro. You know why? Because they're all feeding you a bullshit house. You deserve a house, man. You don't buy the damn house. You want to rent where you can collect rent. Okay? So there's a deal right now, 13 units in Baton Rouge. Here's another deal, 24 units in Baton Rouge. 24 days on the market. Here's 172 units in Baton Rouge. You're going to need to raise about $4 million to buy that deal.
So I know earlier you said you start with the confidence. I know for sure.
No, I didn't say you start with the confidence. You got to know you want to be in real estate. You don't have any confidence.
No, I'm not saying that. I'm saying how many you start with. You need confidence if you want to go to a big number. And what I'm trying to tell you is I have the confidence. And I want to go to a big number.
Good. So what I would do is I would do research on 32 units and bigger.
What I'm trying to say, I don't want to put, not force take too much on my plate. I don't want to fall on my face.
You ain't gonna fall on your face, bro. You're gonna fall into some real estate money. Okay? So, like, you want a tattoo? You go to the ink store. You want to find some real estate? You go to the real estate store. I'm telling you where to go. I'm telling you what to talk. I'll teach you exactly what to say, what to look for. Okay? So, like, guys, you cannot find luck if you don't go look for it. You're not going to win the lottery ticket, dude. You can buy real estate. I can't teach you how to win a lottery ticket. I can teach you how to go buy real estate. 32 units or bigger. If you got to go through city records to find it, you go to the city of Baton Rouge and say, I want to see everything that was bought 3 years ago, 5 years ago, 7 years ago, and 10 years ago. I'm telling you the game. I don't have enough time today to do this, because I said I was going to be here 90 minutes. But when I'm going to be teaching you guys in 2 weeks, why do you want to look at something 3 years ago? 2022, 2020, 2018, 2015. Why? Because the loans are due. Do you have loan maturity in here on the Deal Finder?
Yep.
Like we have a proprietary app called our Deal Finder.
10X Deal Finder, yeah.
10X Deal Finder. And the 10X Deal Finder, you can literally put in a market. The other thing, bro, let me just tell you, you might need to leave Baton Rouge to go find your best deal. I left.
Okay, quick question. Since I got about a year or two in background remodeling, you think I should start off with flipping a house? Or
Now, Dave, have I said anything about flipping today?
No, but I mean, I don't know. I feel like that would lower my cost, but.
No, bro. You don't need that. You're going backwards now. God damn, bro. You're going to be a prostitute here in a second.
Bro.
You know, you could be, hey, should I go clean windshields? Maybe.
What he's doing right now is all he continues to go back to is
his money.
Is his own situation.
You're thinking about your dough. Don't worry about that. You need the asset, okay? You need the asset.
All right, let's go to Wesley. Wesley Smith, you're up. Thanks for being here, Jacob.
Here's 64 units in Alexandria right now that's got a loan due. They're going to sell it, okay?
Have a blessed day.
Yeah, you too, brother.
Wesley, what's going on, man?
Hey, guys. I was more just concerned with listening to everything going on and getting the investors and everything. If you have the money to actually fund the purchase of a property, do you suggest doing so, and taking that risk to bring it all back to one spot, or do you recommend going through investors to not take?
Well, what I would do is I would use your money, fund the deal, buy the deal, secure the deal, and then I would have other investors backfill the deal. Why do you want other investors? Because it's other people's money. Okay, like you want to use other people's money because you want to scale your business. You don't want to do one deal. You want to do a second deal, a third deal, a fourth deal, a fifth deal. Look, if you guys aren't going to build a business out of this, what's better than $1 million?
100?
Yeah, $1 million 100 times. Like this isn't going to get old. Somebody said to me the other day, the money's not going to make me happy. You ain't never had any money, bro. The only people that say money doesn't make them happy, they don't have money. Like, you just need enough money. If you make $1 million, if you could do that 100 times, that would be better than doing it once. By the way, you're going to be helping 100 other families, okay, get deals. So I want to help other people. I'm interested in not just myself. Now, if you're going to think little, I just want to take care of me and my wife and my life and da-da-da. Good. I don't want to just take care of me. I want to help Jared. How do I do that then? I do bigger deals and fun deals for my sister, my brother, Jared, my employees, other people, and I scale my business. I'm not being greedy. I'm actually giving away profits.
Right, that's where I want to be. I want to be at that give back stage.
Well, good. But you can't give back if you can't give back if you don't have the golden goose. Okay, I'm teaching you guys how to find the golden goose, not how to sell it. You get the golden goose. You don't sell the golden goose. You protect the golden goose so you can get golden eggs from the golden goose. Thank you for being here. Okay.
Now, thank you.
All right, let's go to David Ramirez.
See, like my guy in Baton Rouge. Like, I look at all these deals I have, man. These are. I mean, I'm not going to Baton Rouge. The biggest challenge in Baton Rouge is going to be insurance.
Hey, Mr. Cardone.
Yeah, how you doing?
Doing good. I wanted to ask, as a 23-year-old that is about to start in the world of real estate and almost done with the real estate license here in Connecticut, what would be your advice for me?
You got, bro. You got to learn the game, dude. You got to like if you want to get started in real estate, like you got to learn about real estate.
You got to learn. Number one thing you need to learn, bro, is where's the deal at? This is not a head game. This is a deal game. You need to be looking at real estate. You guys need to be looking at real estate every day. Okay? So that's what you got to do first. You should be looking at deals. You guys should be searching deals every day. Second thing is you need to be looking at debt, the debt market. Right? You know, this is what you should be doing.
Calling brokers.
Then number 3, you got to start looking for equity. Now, you can't find equity if you don't have deals. These are all connected. Like, how do I find a good chick? Well, not on the internet. That's not a good chick there. That's pornography. Okay, deal. You got to go find a deal. Then you got to start talking to people that finance deals, and then you got to start talking to people that have equity, cash, deal, debt, equity. Yeah, and that's going to build a network. Number 4 thing you need to start doing is networking with other people that are doing real estate deals. Okay? And that is going to get you the 5th thing, which is confidence.
Confidence.
Yeah, there you go. Let's go to the next question.
All right, Leah.
Again, guys, the offer is at grantcardone.com/now. We're going to end this. I'm going to end this in 15 minutes. I'm going to take the offer down. This is a ridiculous offer. $297. You get my increased value calculator, the underwriting calculator, underwriter. You get the deal tracking sheet, the millionaire booklet, the dictionary, how to create wealth investing in real estate. You get the course book download that we're going to do 2 days live with you on a Zoom call. 2 days. This will be a very limited number of people. We want you guys to be there, and I'm going to spend 4 hours each day, 8 hours total, plus going over how to get started, where to start, what to look for, how to get the funding, how to raise the money. I'm going to share everything I can with you over 8 hours. Plus, I'm giving you a store credit for 100% of what you pay. I'm going to give you a credit at my store that you can apply to anything else in the future. And if that wasn't enough, Jared offered you a one-on-one call with one of our coaches. If you want to tell them where you're at, where you're starting, what market, what your situation is, if you want to get on the phone with one of our coaches, just kind of walk through what your situation is so we can customize this to you. And the last thing is,
we're going to give them 2 weeks in the mentoring program.
Yeah, 2 weeks in a Q&A. Those are about an hour and a half long next Friday and the following Friday. And if all that wasn't enough, if you're not happy with it, we'll give you your money back and you keep everything I sent you.
And the $297 credit.
Yeah, I did the $297 credit. Okay. But look, I'm looking for people that want to grow their real estate portfolio. 16, then 32, then 48. How many of you want to grow? See, so
Leah.
Miss Leah, I want to make you worth 10 or 15 or 20 million dollars.
Yeah, I want that too. I need that too.
Let's go.
I wanted to ask, with the mentorship program, do you also teach us how to structure whatever business structure we?
Yes.
I don't know. That's best for us, like with the strategy call.
Yes, the LLCs,
Okay.
the trusts, the LLC setups, the organizational setups. We even.
Yeah, that's
Yeah,
her back.
we got you, Leah. Okay. The offer, guys, the opportunity is at grantcardone.com/now, grantcardone.com/now. We're going to take this down in the next 13 minutes. We've offered.
You mentioned real quick that you don't do every market. So if we do know other persons that are in real estate, they're not as big as you. I mean, I hate to like say, hey, this is how Grant's doing it, let's do it like this, because they do their own thing. But would you recommend that at least that somebody is knowledgeable, like where I'm at? I'm in Los Angeles, and I know somebody that does have apartments here in Los Angeles. So, but I like the way you're doing things. He's not as big as you.
Yeah.
But he knows this market, right? So
Yeah, but that doesn't look. I can't be in every market.
Yeah.
You know, I can only do so many things. I'm in Miami. I know this market. If I lived in Los Angeles, I'd be chopping freaking Compton up. I
hear you.
So like I'm gonna find out that little market. I'm gonna find out where the weaknesses are in every market, whether it's in Hollywood, Malibu, Altadena, it's in the Palisades. I'm gonna find out where the little crack is, and I'm gonna go I'm gonna go just Attila Hunt it.
Okay. So we can get more mentorship. Besides, like, we don't want our money back. But
No. We have a mentorship program. I think it's $5,000. We meet every week. What is it? How much is it?
$5K for life.
5,000. We meet 5,000 for life. You pay one time, and we meet every single Friday on a Zoom call.
Okay.
We also have a club, guys. Like I didn't come here to talk about all that, but we have a club where people come into the club and actually raise money for their deals inside the club. We meet 4 times a year. This is for serious real estate investors. Okay, we meet 4 times a year. Once in Miami, once in Scottsdale, and then two more times here in my offices. This is a very small group of people. 4 times a year, twice in a public setting in a hotel, and then twice in my offices, twice a year.
Wednesday.
And that is $27,000 or $27,500.
And they do a call every week.
And we do a call
every week. They do a call to pitch deals and raise money for deals every Wednesday, and then those guys get access to the Friday call as well. Let's go to Arthur.
I mean, look at the real estate of Phil.
Hi, Grant. It's a pleasure to get to talk with you. Thanks for bringing my awareness about that tool. It's like $1,000 a month to find properties, those good deals. I'm actually looking for one in Sacramento. So I think that's probably my next move to find more about that website. But my question for you is, what question do people never ask you that they actually should ask you to succeed faster?
Yeah. What should they ask me? They shouldn't. They should just, hey, bro, what else can I buy from you? Like, how can I get closer to you? How much? Like, what people should do is, bro, how could I pay you $1 million to teach me how to get to $1 billion? Like, people just do the wrong stuff. Oh my God, I don't know if I can afford $297. I'm not going to be able to learn this. People invalidate themselves so much. Like, the question you should ask yourself or ask me is like, what am I going to do wrong? Okay, number one, trying to do it by yourself is dumb. Because you've already proven you can't do it by yourself. It's already, like, I don't know why people want to try stuff by themselves. By yourself is what's got you in the room you're in right now. Okay? So number one, mistakes. The question you ask is, what mistakes do people make? They try to do it by themselves. 2, they go too small. 3, they don't raise money because they don't have confidence in themselves. 4, they look at deals that are smaller than they should be. They should look bigger. 5, they sell assets. They shouldn't. You shouldn't flip and wholesale. 6, I'm just telling you all the mistakes people make. They don't scale the portfolio. Okay, 7, they do short-term debt rather than long-term debt. Like, I can tell you every mistake I made. You know, So, 8, you don't spend the time and energy and money creating the network you need to. Like, spend money, man. You don't need money, bro. You need deals. Okay, these rich people don't have money. They got net worth. Quit hustling for the fiat. I mean, that's cool. Hustle for it as long as you have to, but at some point you want to convert that money to something that's a deal that takes care of you and your family. Okay, let's go to the next
Gary.
Question. Yep. And we're going to onboard. Let's onboard. By the way, in addition to everything else I said, guys, we're going to start by onboarding you today with where to get started in the program so you're best situated for the Zoom call that we're going to do on December 6th.
And you know how to access everything you got and all that. Gary, what's up, man?
Hey, how you doing? How you doing, guys? How you doing, Grant? I've like you said, I joined the club and everything. I've been working with brokers and smaller deals, chasing those. I actually ran across I say it's a big deal.
Yeah.
It's off market. They're 142.6. I figured at 38 million. But like you said, the steps that go in between everything, your stuff, your training provides it, but it doesn't provide the nitty gritty. So that's why I signed up for the 6th and 7th. Get down the weeds between everything.
Great, dude. Look,
so
you're
looking I am looking forward for some guidance on that.
Great. Look, your first deal could be $30 million. Like, there's no reason. My first deal was 80 grand. It didn't need to be. I could have done my first deal at $5 million. You could do your first deal at $30 million. They're easier to do. The only thing you're going to need to do now is know how to get control of the deal. Because if you don't have control of the deal, you can't get money from investors.
Right. The broker is going to decide who gets the deal.
Pretty much.
So the broker, like if you offer him 38 and Grant offers him 35, they're probably going to do the deal with Grant.
I mean, maybe. Like if you knew how to talk to them the way I did, they'd give you the deal.
Exactly.
So like I'm doing a deal right now. Goldman Sachs is a much better buyer than I am. I'm going to get the deal. I'm going to get the deal for a lower price than the institution because I know what they're not telling me. So some of the stuff that we're going to teach you guys is like how to work deals, how to work the broker. How would you like to know when you're being told the truth and when you're not? Okay, how to make a second offer.
Oh, absolutely.
Like I'm gonna show you a bunch of little plays in there, how you could get that deal done, and how to find out where you're at in that deal structure, meaning where they would pick you. Okay, so I look forward to getting to know you better. All right,
let's go to Anthony.
Right. Okay, the offer, by the way, guys, the opportunity for you is grantcardone.com/now. grantcardone.com/now. This is a tax deductible event for you at $297. Then I give you a credit back at our store for $297. So you're virtually, it's a zero out sum game. Okay, just use the $297 against any of our products or offers in the future, whether it's mentoring or the club, or you want to come down and see our offices. We do a bunch of stuff with people throughout the year, about 100 events. You can apply it to any of those things. I'll give you a full credit, and if you're not happy with the course, we just give you money back. And we both walk away. You wipe your hands, I wipe my hands. We're friends. Everybody loves everybody. But my goal is to teach you guys how to do deals. Okay, yes, sir.
Hey, guys. It's a pleasure speaking with you guys. It's Anthony with Astra Capital. 3 questions. I missed the 2 last bullet points from the breakable real estate rules.
Yeah. Okay.
What were those last 2?
What were they?
Did you take advantage of the offer? Because we'll send out a recording from this for those who did that.
Okay, sounds good. I'm definitely going to take an order from that as soon as this is over.
Yeah.
And my second question is...
Yeah, let me tell you what they were, though. Know your exits and refi and never sell. Yes, I did go over them. Know your exits and then refi and never sell. Now, if you guys don't know what a refi is or how to do a refi, I mean, there is some stuff you need to know how to do. So there is a way to do a refi, and there's a way to know how to do the refi. And by the way, I'm going to set you guys up so that when you go to a bank You have all this terminology for you. That's why I want you guys to get like the simple dictionary. I've had people, a guy he's bought hundreds of millions of dollars worth of real estate. It's like, Grant, your little dictionary was worth tens of millions of dollars to me because I didn't know half of what these people were talking about when they would talk to me. So like, you want to talk the way they talk, you know, when in Rome, as they say. Like, you got to talk the way they talk, okay? And you got to know what you're asking the target to do.
The way you say stuff matters.
Yeah, the way you say stuff and talk about it matters.
If you talk to the broker and say the wrong things, they're never going to call you back or take you seriously. And they control the deal. So you got to get in with them. What's your next question?
Okay, let's go to the next person. I can't hear him.
Hello?
Yeah, go ahead.
Hello?
Go ahead.
Sorry. I have a real estate company. We specialize in doing wholesaling. It's called Astra Capital.
Yeah.
We have a contract, we have a LLC, but we haven't landed our first deal. And I'm actually here because I believe that you're connected with Brian. And he told me to join this meeting. And so I just wanted to know, how did you land your first deal with there's so much competition and have success on that?
There's competition for this bullshit you're doing right now, wholesaling. There's no competition. There's very little competition for what I'm doing right now. You're just in the wrong space, bro. You're around a bunch of bottom feeders. Okay, you're around a bunch of people that want to buy something and they want to have an option on it. It's a garbage business, bro. Every wholesaler wants to be me. Every wholesaler wants to be Grant Cardone.
It's a job.
Okay?
You're not an investor.
You're going to buy something to sell something. You're a prostitute, bro. Like, just go work a street corner. That's all you're doing. You buy something, you flip it, you pick up your $10,000, you move on to another deal. It's over and over. You're just a sales guy. Like, you want to own an asset and you want it to go up in value and you want to build asset. You don't want to dump stuff. Okay? Jeff Bezos is not a flipper. Elon Musk is not a flipper. Warren Buffett is not a flipper. Like, get out of all this quick money stuff. You want a job? Go get a job. Okay? If you want to be investors, we're teaching you how to become a long-term real estate investor to create massive amounts of net worth for yourself. Okay, let's go to the next two. And then we're going to close this up, guys. I'm going to shut this offer down in 2 minutes. In 2 minutes, we're going to shut the offer down. You will not see this again. If you want the strategy call, if you want the guarantee, if you want the underwriter calculator, the instant underwriter calculator, the deal tracking sheet, the book, the hat, if you want these things, just grab it now, grantcardone.com/now. We're going to take it down in 110 seconds. Yes, ma'am. How you doing?
How are you?
Good.
So, first of all, I wanted to know why Hallandale and Hollywood is a bloodbath.
Well, because they have so much supply there. It's a great time to buy. But you don't. Yeah.
Sorry.
Yeah.
I live in Hollywood, and I'm a surgeon. I don't really have too much time for all of this, but I want to get into the space because I don't want to work for the rest of my life.
How much money do you have?
I have a lot of liquid that I could invest.
See, she's exactly what I described earlier. I just described her. I bet I've said it 3 times. These are great investors. She does not have the time to go do this. Even if she buys her deal, she's not going to have time to manage the deal. Even if she bought a deal and had time to manage the deal, she's going to be doing a surgery one night and the sewage is going to back up and she's going to freak out. She's going to be like, I cannot do surgeries and do sewers. So it's not a thing that she's going to want to lean into. I'm sorry, your name is?
Shaney.
Shaney is the perfect investor. Okay, for your market. Now, if I was talking to you about Los Angeles, you don't know it. But the moment I said Hallandale, Hollywood, you're like, bloodbath. Yeah. So you and I could do a deal together because I'm investing down here. And just so everybody that's on today, 53,000 people joined this, okay? My real play here, for those of you who are like, why is a billionaire spending time on a $200 product? Well, I'm not really, okay? This is what I'm doing. I'm helping people. I think it's a good thing to help people. Out of this, a small percentage of the 53,000 people that joined here will become investors with me. You could be one of those. Yeah, so like I show you guys how to do smaller deals while I'm doing big deals. Guess what? People see this and say, that's cool, but bro, I wouldn't mind putting some money in a bigger deal with you. So that's part of our motivation for doing this, for those of you who wonder, why am I doing this? So I'd love to get a meeting with you about what we're doing, like on that Boca deal. This deal right here, just down the street, I'm sure you've driven by this deal before. That deal. That's a $300 million piece of real estate right there. It sits in front of $40 million homes. We're going to make a couple $100 million on that. All the money will be raised for that transaction. I bought it, and then investors like you will be investors with me on it. Like, we have a tenant in the building. They earn their rent making the investment in the property.
Right.
So they pay rent, but they invested $1 million in a property. They're my partner in the deal, and they're renters there. That'd be a great deal for you. So we're still waiting for Hallandale and Hollywood, just so you know, and Aventura to fall apart. It's not quite there yet, but I drove through it yesterday. I drove through the circle.
Yeah, I live very close to it.
Yeah. You know the deal, you know the big building, the 3 buildings that are going up right there across from Shell Bay on Hallandale?
I mean, there's so much new construction.
Yeah, exactly.
It's impossible to keep up with.
Yeah. Well, it's not impossible for me, because I don't do surgeries. What kind of surgeries you do? What do you do?
Orthopedic.
Okay. So like what? What kind of surgery would you do on me?
ACL reconstruction or rotator cuff repair.
Oh yeah. Oh my.
Or a knee replacement.
Yeah, I got all those problems. Okay.
All right, let's go to.
Thank you for being here.
Let's go to is David.
You need a rectal exam, Jared. That's what you need. Me and Jared are gonna. How many days are we gonna go? We're gonna go hard before the end of the year on getting lean and mean.
Oh yeah.
Yeah. What's up?
Hi, this is David.
Hey, David. What's up, David?
Very interesting. Thank you very much for your presentation.
Thank you. Thank you. So
I
sophisticated.
came today prepared with a project which more or less meets your criteria in the New York area. According to the information, the cap rate is 9.2%.
Yep.
Cash on cash is 15.19%.
Yep.
On a 25% down payment. NOI is 723,000. DCR is 1.68. How do I take this to the next
Where is
step?
it? Where's it located?
This is in New York.
Where?
In the Bronx.
Yeah. Yeah. And what's the location like?
What is the?
What is the location like?
I think the location's good. You know, Bronx is a mixed area. There are areas which are not so good, but this is the area next to Van Cortlandt Park, which is middle class professionals, Fordham University, the hospital.
How much a door? How many
There are
doors?
74 units, so they're asking 7.9 million.
Yeah. Yeah, I had it at 8 million. Sounds like a steal to me.
So that's what I thought. Now I can't figure out how to do it. I have no experience.
Every 7 years you pay for it. Pays for itself every 7 years. If the rents don't go up. Now you got that you got the Madami effect, your boyfriend.
No, there'll be no Mamdani effect on this, I don't think, because basically, I mean, they're asking for 8.
Did you vote for Madami? Did you vote for him?
No, I'm not in the city. I don't live in the city now.
Okay. Yeah, so, you know, the whatever effect, it's probably going to create some opportunities over there. If I lived in New York, I'd be buying real estate there.
I think so, because real estate in New York is this area. I mean, there are all kinds of people doing this, but this looks like a clean deal. You know, I want to talk to some of your professionals because
Dude, let's do it. Join us. We'll raise all the money for that deal. But this is what I
Okay,
want to know.
wait.
I want to know this, dude. Where do you get those eyebrows from? Those eyebrows are popping. How do you comb them? You comb them in the morning?
No, I don't comb them in the morning, but I have to trim them because I'm getting older now.
Dude, those things are rocking hard, bro.
All right, let's go to Anthony.
I like that guy. You know, see, he found a
Yeah.
big deal.
Yep.
He could do that deal with this group. I don't know New York. I can't be because I'm not there, so I don't know the Bronx. You know, I wonder if it's near Dumbo.
Did we do Adrian yet?
Well, is there someone I can talk to about this?
Yeah, join us. Join us for the mentoring call. The mentoring call will be Friday. When you join us at grantcardone.com/now, we'll see you on the mentoring call on Friday. In fact, we're going to go ahead. Let's just go ahead and do this now. Let's go ahead and onboard everybody that's going to take advantage of it, guys. Again, I wanted to spend some time with you. I promised 90 minutes. I'm sorry that I spent more time with you guys. I'm not sorry because I enjoyed spending the time with you, and I love teaching people, and I love sharing my experience. And I hope you guys have all made a decision to move forward with this. You know, decision making is one of the most important things a person can do, is make a decision. And a lot of people don't make decisions because they've had bad experiences in the past, but I could promise you this, okay? Making a decision here at the end of the year that's survival, that's about learning to be an investor, that's about claiming your part of American real estate and buying real estate and becoming not a homeowner, but an investor in real estate in America. There's no way you make a bad decision on that. It's impossible, okay? Because in real estate, you're either going to make a decision to pay for it or be paid for it. And I'm showing you guys how to be paid, how to get rich in real estate. I'm not talking about because you owned one home and you bought it when you were, you know, in 2025 and you bought it for 400 grand and you lived in it for 50 years and you sold it when you were dead and you made, you know, some money because you lived in it for 50 years. I'm talking about buying something that starts paying you every month, cash flow, tax write-offs, and it creates your net worth. And you go do a second one and a third one and a fourth one and a fifth one. I have 47 properties that pay me. How many houses can you live in? One. How many properties can you own? As many as you want. As long as they're paying you. As long as they help your investors and the tenants. And it can create massive net worth. So I hope you guys have made the decision to move forward with us and use this correction. We are in the biggest real estate correction of my lifetime, folks. This will not last, I'm telling you. This window is going to close, okay? It's probably going to take you, I don't know, 45 days to learn this material, to really get confident with it. And you're going to be set up perfect for 2026 to start buying real estate. You could be in the Midwest, the Northeast. You could be in the West. You could be in the Northwest. You could be in the Colorados, the Arizonas. Unbelievable markets right now. Texas. All these markets are on sale right now. And I believe we're going to look up and say 2025, 2026, maybe a year or two from now, you're going to look back and see rents explode in this country. And you guys could make fortunes for you and your family. So I hope you make a decision to join us. We're going to start, what is it called? Onboarding. Those of you that made the decision, grantcardone.com/now. This will be the last time I offer this opportunity to you. grantcardone.com/now. You go there, you put your credit card in, it's $297. And then I give you a credit for $297 in my store. So virtually you're paying nothing for this decision. If for any reason you're unhappy with it, dude, we'll give you the money back. Like there's no way for you to lose here. But this is what you get, okay? You get the increased value calculator. This is an app. I'm just showing you kind of what it looks like. This is how, when I buy something, I can show my investor, hey, this is how we increase the value from 4 million to 6. This is why you're going to make $1 million and I'm going to make $1 million. This explains how the investor understands the offer, okay? We have our deal tracker. You're going to look at probably 50 deals to buy one. We want to track these deals because every deal you do and don't do is information. We're going to give you the instant underwriter calculator. You can't buy this anywhere. This is how I underwrite deals so fast. So when that guy said to me in New York, in the Bronx, he had a cap rate, this was the NOI, and I said, it's $8 million. And he's like, Bruh, it was 7.9. I mean, I knew that in 6 seconds. But I have it in my head. People begged me to build this because some people are not so good at math, okay? Real estate is a math class. You don't have to be good at the math. I gave you the app. I'm going to also give you my best-selling book, How to Create Wealth Investing in Real Estate. You can read this literally in one night. 90 minutes, you can read the whole thing. I'm going to include the Millionaire booklet. This is a mindset book. I dare you to keep this book with you in 2026 and not become a millionaire. I dare you. This book's magic, okay? I'm going to also include our 10X notebook so that when we're taking notes at the real estate workshop in 11 days, you can use this to take notes along with the course book. I'm going to give you our cash flow hat, trademarked, special. Can't get this any other place in the world. Perfect profile. You too will feel like Grant Cardone when you rock the cash flow hat, okay? Also, we're going to give you access to a 2-day interactive, no travel required, front row seat, absolutely phenomenal, with the recording, in addition to a strategy call with one of our coaches. And the next 2 Fridays, we're going to do a Q&A call after our onboarding right now. The website's grantcardone.com/now. Nothing to lose, nothing to risk, folks. I hope you take advantage of it. Click that button right now, grantcardone.com/now, and then we'll move you into the onboarding and start to answer some more of your questions. Thank you so much for being here today, and I look forward to seeing you on Friday.
Hello, everybody. How's everybody doing? How are you guys feeling? How does everybody feel after those 3 hours of our free real estate live training? Go ahead, drop a 10X in the chat if you enjoyed that. It's great to see each and every one of you. My name is Christine, and I'll be guiding your real estate interactive onboarding session today. And it's going to be my intention to empower you to understand how the program works and how to use the training to solve your problems and increase your revenue. So go ahead, grab a notebook, grab a pen so you can take notes, and let's go over exactly what's included in your program. There are going to be key parts to the real estate interactive package, and that's going to include a real estate interactive 2-day event on December 6th and 7th. You're going to get weekly real estate mentoring Q&A calls leading up to the event. You're going to get Grant's Dictionary of Multifamily Real Estate Terms, a 101 strategy call, Grant's Instant Underwriting Calculator, the Increased Value Calculator, a private networking group, Grant's Deal Tracker, a 10X Toolbox, and a 297 gift card